the January 21, 2021 meeting of the Board of Administration for the Federated City Employees Retirement System and Federated City Employees Healthcare Trust. Let's start with roll call today. Vice Chair Horowitz.
Present.
Thank you. Trustee Chandra.
Present.
Thank you. Trustee Jennings.
Present.
Thank you. Trustee Kelleher.
Present.
No, thank you very much. Trustee Orr, she's out, I believe. Yes, and Trustee Sun.
Here.
Thank you. I'm also here, so we've got 6 members. I'm going to run through ground rules again. Thanks everybody for your patience and indulgence. This is per the Governor's Executive Order regarding Brown Act that allows us to do these meetings via Zoom. All votes will be roll call votes. If you're not speaking, please be on mute to cut background noise. For discussion items, each trustee will have a turn to speak in roll call order more than once if desired. The public will have an opportunity to speak on each item after the trustees. The public will have an opportunity to speak again at the end of the meeting on any item not on the agenda that is within the subject jurisdiction of the board. Also, just a reminder, if you're one of the presenters, please present on full screen. It makes it a little bit easier to see it if folks have a smaller screen. Okay, so we're going to move on then to orders of the day. We do not have anything, no sunshine items need to be waived. I do want to check Roberto. I'm trying to be mindful about breaks. Does it make sense to you? I'm looking at the agenda. Perhaps we take a break just before the disability training.
Yeah, that sounds good. I think also it depends on how the meeting is going, but yes, I think that will be a worthwhile break.
Okay, yeah, I'm just looking at the items and taking a guess at the length of the discussion. All right, so let's count on doing that. Let's see, so, and then Roberto, can you remind me, I don't think, since we don't really have any changes to the agenda, we don't need to do a motion second on the orders of the day.
That is correct. We can just go directly into the consent agenda and approve the items unless any particular items will be pulled.
Okay, very good. So going on then to consent. Item 1, we have in this section, approval of service retirements, the approval of deferred vested, approval of board minutes, approval of return of contributions, acceptance of communication information reports. Is there any, would anyone like to pull any item off of consent? I think, excuse me one moment, I'm just finding it. I'd like to pull item 1.5A, the article regarding Mr. Polani off of consent.
Yes, Trustee Chair Castellano, I'd like to put 1.5B, the quarterly newsletter as well.
Okay, very good. So let's go ahead and take care of the rest of the consent calendar before we move on. So can I have a motion and a second to approve the consent calendar today, excepting for those 2 items?
Trustee Kelleher, so motion.
Thank you, Trustee Kelleher. Second.
Trustee Jennings, seconds.
Trustee Jennings, thank you very much. Let's do any discussion from the board. Any public discussion? Okay. Let's do the roll call vote, please. Vice Chair Horowitz.
Aye.
Thank you. Trustee Chandra.
Aye.
Thank you. Trustee Jennings.
Aye.
Thank you. Trustee Kelleher.
Aye.
Thank you. And Trustee Sun.
Aye.
Thank you. I also vote aye. That motion carries 6-0. So item 1.5A, there's an article in the packet, Prabhu Palani named Trusted Insight All-Star Chief Investment Officer. I wanted to pull that out just for some extra recognition to Mr. Palani. Trusted Insight is a large member group for institutional investors. I saw online someplace that had 140,000 members, and if you had a chance to click on that link, there was only 10 people in the. Mr. Palani, was this in the country or in the world? I mean, either one's pretty big, but I think it's a national or international.
Oh, it's very much national.
Yes. Okay. But anyways, I thought that was quite a recognition, and the podcast I thought was quite impressive. So I just want to congratulate you. In addition to what people are seen in the packet, I think it's just such a noteworthy recognition. I wanted to call that out for you.
Thank you, Mr.
Yes.
Chair.
Yes, of course.
And I really thank the boards too for all the support over the past year and for all the quick actions that the board took, which really resulted in, San Jose being #1 last year among public
Yes.
pension plans. So all credit to the boards and the excellent investment team.
Yeah, you're too kind. Okay, and then let's Roberto, let's take care of 1.5B, and then we can approve those two items together.
Yes, thank you, Mr. Chair. Before we go to 5B, I do want to echo your words on the congratulations to our CIO. He's done an outstanding job with his staff, and yes, it's a big mode that's about, obviously this is a joint effort with the boards as well, but a lot of that have to go with the work that he does as well with the staff. So congratulations from the members' standpoints, Prabhu, and from the staff. Thank you for keeping the name of San Jose in the forefront. So congratulations, well deserved. In 5B, just wanted to call just to remind everyone, this is the quarterly newsletter that is issued from our office. Just to remind you, if you have any questions, we're happy to address them, but also to call attention, there's a lot of work that goes behind the scenes by the staff, and especially by the deputy director and the administrative assistant, that's Barbara Heyman and Linda Alexander. So I wanted to also thank them publicly for the work that they do to have this quarterly newsletter going on every 3 months. So again, if you have any questions, we're happy to address them, but we are really excited that we started this process back in 2020, and that we look forward to continuing the issuance of the quarterly newsletter. So thank you, Mr. Chair.
Yes, yeah, I agree. Great, another great newsletter, and a great vehicle for communicating with all the stakeholders, beneficiaries included, certainly. Okay, could I please have a motion and a second to approve item 1.5A and 1.5B off the consent calendar?
All second.
I believe. Okay, good.
I'm sorry, the motion was from Trustee Chandra?
Horowitz.
No, actually, I think Horowitz made the motion. I think Kelleher seconded.
Okay, thank you very
Thank you.
much. I'm sorry I missed that. And any, so
Jeopardy,
motion
you
from
have to
Trustee
see who
Horowitz?
gets to the buzzer first.
Yeah. Yeah. Okay, motion from Vice Chair Horowitz, second from Trustee Kelleher. Any other discussion? Any public discussion? Okay, let's do a roll call vote, please. Vice Chair Horowitz.
Aye.
Thank you. Trustee Chandra.
Aye.
Thank you. Trustee Jennings.
Aye.
Thank you. Trustee Kelleher.
Aye.
Thank you. Trustee Sun.
Aye.
Thank you. And I vote aye. Also, that motion carries unanimously 6-0. Next on the agenda is item 2, death and survivorship notifications. This time I'd like to ask for a moment of silence for those who've served the city and have recently passed. Thank you, everyone. Okay, item 3, investments. 3A is the oral update from the CIO of Retirement Services. Mr.
Excuse me,
Kwame.
Mr. Chair.
Yes.
My name's Brad. I had my hand raised.
Oh, I'm sorry. Yes. Thank you very much. Sorry, I missed that.
No, I apologize, and I was wondering if I can speak on that item reported on by Mr. Pena.
15B. Yes.
Yeah, that's correct. Thank you, Mr. Chair, and the rest of the board. Again, Happy New Year to everybody. I just wanted to thank Mr. Pena and his staff for putting out this newsletter and appreciate the communication. I am a retiree. Question I had though, specifically, I just want to make sure there wasn't a typo. Under the funded item, it said that the Federated retirement plan was 53% funded. Is that correct?
That is correct. Yes.
Okay, I just wanted to make sure that wasn't a typo. I'm concerned about that, and maybe this is to be specifically addressed to the CIO and to the current board in particular. How concerned are you with that? And in relation to other independent plans such as City of San Diego, City of San Francisco, City of Fresno, how does the City of San Jose plan rate in comparison with that peer group?
So let me take let me try to address that issue, Brad. That's a very interesting question. We appreciate it. When you compare our plan with those that you mentioned, our funding ratio is clearly lower than those of the plans. That goes without saying. I usually use the City of San Diego more as a comparison, only because it's a city just like San Jose that is not joined with the Social Security withholdings. It also was the other city in California that went through pension reform some 18 years ago. And even though their system right now at this point, their funding ratio is higher, you are well aware, I suppose, of the latest Supreme Court decision that is indicating that they're going to have to make something's going to have to happen from the decision that they made back in 2012, where they took all the general members directly to a defined contribution plan for new members. And so that certainly will have an impact in their numbers. That information is not included in the current valuation because they have no way to value that or understand what the eventual decision is going to be on that or agreement between the unions and the city. But to your point, the board, we do have an actuarial evaluation that is performed every year. Today, this morning on the 4, what we have is the valuation for the healthcare, but the final valuation for the pension fund was actually approved by the board at the December meeting. And we feel, number one, that the assumptions that the board implement and make decisions on are very reasonable and actually very strong assumptions, especially the assumed rate of return, which is about 6.625, is considerably in the bottom part of the peer systems across the state and the nation. And second, there is certainly a long-term plan. Obviously, assuming that all these assumptions that are not only reasonable pan out going forward, there's an expectation that if the assumptions are reasonable and the contributions continue to be made, that the plan will improve over time. And in about 10, 20 years time, you should see a different kind of situation. But there's certainly a plan, and I think I don't want to speak for the board, but I can speak for staff that we feel confident that with the work of the actuaries and the work that we continue doing from an investment standpoint, that we will have the system in a strong footing going forward. Thank you.
Well, thank you for your explanation. I'm sure people are tired of the expression of kicking the can down the road. even though I'm a current retiree, I'm under tier 1. I'm concerned about those people who are on tier 2 and tier 3. And if we are indeed just kicking the can down the road, as a retiree and also a taxpayer, I'm also concerned with the effect that this underfunded liability we have has an effect on the city budget as a whole. I'm sure the council representative there is well aware that retirement funds come first as far as payment. So anything that gets passed on in terms of city services are secondary. Most retirees don't, and again, I don't want to paint with a broad paintbrush, but like you said, I'm speaking for myself, but I'm thinking that most retirees don't even pay attention to this. You know, they get their pension checks in the mail every month and they're happy with that. So again, I just want to express my concern and going forward, and for those current members of the retirement board, that they take heed to this and look into the future for future retirees. And again, thank you all for your service, and thank you for the opportunity to speak this morning.
Very good. Thank you. Sorry I missed your the hand raising, and yeah, anyone, if I happen to miss that for the rest of this meeting or prospective meetings, please do let me know. I had set my Zoom thing to only see those whose monitors are on, so I didn't catch those if they're not. So I wasn't seeing their hands, but please let me know if I missed that. So thank you again, Brad, for being here and speaking. And sorry again, I missed your hand. All right, we're going to go on then to item 3, investments. 3A is the oral update from the CIO Retirement Services. Mr. Polani.
Thank you, Mr. Chairman. Good morning to everyone. Happy New Year. I just want to share a few numbers. We have a pretty light agenda on the investment side. So for calendar year 2021, the pension return, these are unaudited numbers, 15.4%. And of course, our accounting is on a fiscal year basis, but I just thought I'd share that number because you all know.
Could you repeat that number one more time, please?
Sure, 15.4. Again, these are estimates from our consultant, but I'm sharing that simply because, you know, the start of the year last year, as you all remember, was pretty rough, and we actually thought we'll end up in the red, but fortunately, markets did bounce back, and that was a good return. And Makita, next month, when they actually present their official performance numbers, will also share with the board how we rank relative to our peers. Fiscal year to date through January 19th, and the clock for this starts July 1st, was 18.5%, extremely strong so far for this fiscal year. So we have some in the bank, just in case the markets tank going forward. Anything can happen between now and June 30th. But we have, you know, some cushion there to beat our assumed rate of return. And particularly December was a very strong month. The planned return 3.25%. So I just wanted to share that with the board. And we have, this year will be again another challenging year. As retiree Brad pointed out, there are considerable challenges for us. There are things that we can control and things that we cannot control. Certainly the asset side of the equation and the returns on the assets is something that we can control as fiduciaries. And, you know, so we all work hard to make sure that we have the best asset allocation possible and to give ourselves a chance to beat our assumed rate of return going forward. And I also, once again, just wanted to thank the board. We will be, for the actions last year, we had several special meetings at the IC, we had board meetings, and we moved in a timely manner. We will actually kick off our strategic asset allocation process for this year once more at the end of this month, once we get capital market assumptions from Makita. And I'll be working very closely with your investment committee in coming up with a few options for the board to consider. So the next investment committee meeting will be in February, which should be an interesting meeting. We'll have a lot to discuss in addition to strategic asset allocation. We'll also be making a recommendation on the city's pre-funding, and on behalf of the board. And I'm yet to do some any work on that. But as soon as I do some work, I will share this with the IC next month. With that, Mr. Chairman, I conclude my remarks. I'm happy to take any questions.
Great. Thank you very much, Mr. Polani, for the update, and to you and your team for the outstanding results. So is there any follow-up for Mr. Polani?
This is Trustee Sun. I have a follow-up. I just want to make sure I heard it right. The 15.4% performance result is for calendar year 2020, right, instead of 2021.
You're right. I wish it was 2021. I misspoke. My apologies.
If you did that in for 2021, I would say you're probably the top portfolio in the country.
Yeah, I think so. I mean, that's wishful thinking right there, and you can see that's coming out through my misstatement. Yes.
Well, keep up with the good look, good work. You might be ending up being the top one, truly number one in the country.
Right, that's right.
I have a question. I'm just curious, Prabu. In April, council's going to be looking into the pension, the going out with a
Pension obligation funds.
Thank you. And but you're talking about the pre-funding that the city would be doing. I mean, I know that can't go forward that fast. So I assume even if, let's say, council decides to go forward and do this, I assume they wouldn't be able to do that for some time, right? I mean, it would take a while. So it would be more impacting not this next funding allocation, but the year after. Is that correct?
So you're talking about pension obligation bonds.
If they did.
Yeah, I think that's several months away is my understanding.
Yeah, April.
Yeah, so any impact that'll have on the plans will be probably, a couple of fiscal years down the road, I would think.
Okay, yeah. So the funding allocation they have to come up with, or the pre-funding for fiscal year 21-22 will just be based on where we're at now.
That is correct, yes.
I don't think the pre-funding has anything to do with pension obligations on it at all. Pre-funding is just paying the city's contribution at the beginning of the fiscal year, or at the designated dates of the fiscal year, instead of making the contribution at a biweekly basis, right?
That is correct.
Yes, that's right. And
yeah,
correct.
Yeah, and the
But
pension
doesn't have
obligation
anything to do with the unfunded liability.
No, I don't think that pre-funding, it's not really, pre-funding has something to do with it, because a bigger portion of the pre-funding is the annual contribution towards the unfunded liability as calculated by the actuary. But the pension obligation bond will be entirely taken upon saying how much we want to finance right now for the unfunded liability. That's quite different from pre-funding mechanism for the city.
But if they pay off a major part of the unfunded liability, wouldn't there be less that they'd have to pre-fund? Or am I being too simplistic?
That would be the case. Yes, if they take up the unfunded liability, issue a pension obligation bond to finance the unfunded. If the city decided to deposit all the proceeds in the retirement plan, then the city's pre-funding in the future will change.
Okay, but it's the future. Yeah, and that was my question. I
Yes.
thought it was. I just wanted to be sure.
That's right. And
thank you, Trustee Sun. I appreciate it.
yeah, thank you, Trustee Sun, for pointing that out. And yeah, really, pre-funding at this point, absence of POV and other issues, is really a cash flow timing one, and whether it makes sense for our sponsor to actually pre-fund or not pre-fund and pay as they go. And we have a formula to decide what that discount rate is that we give to the city, and that was approved by the boards several years ago, and we have sort of followed that. And we look at that, and we'll make a recommendation to the investment committee in February, and then take it to the board.
Any additional follow-up for Mr. Polani on item 3A? Okay, let's go on to item 4, old business, deferred continued items. 4A is the discussion and action on other post-employment benefits evaluation results as of June 30th, 2020, presented by Chiron. And Mr. Hallmark is here with us.
Good morning. Let me
Good morning.
Get my screen share here. All right. So we're here. I have Mike Shunning here with me. He's our healthcare actuary. And we're here to present the final results of the June 30th, 2020 evaluation for the OPEB plan, the retiree medical. And so this valuation develops the city contribution for fiscal year end 2022. Member contributions are fixed by the statute, so it does not affect member contributions, and it's also used for GASB. Last month, we also talked about the two different types of benefits. There's an explicit subsidy where the city pays the premium for the retiree healthcare that the retiree selects up to a maximum of the lowest cost health plan. That is what we refer to as the explicit subsidy. And then there's also an implicit subsidy, which is driven by the fact that costs for healthcare vary by age. And so pre-Medicare retirees in particular, the premiums are lower than the costs of their healthcare. And so that is called the implicit subsidy because that is paid for by the city through its active health premiums. The board is really only responsible for setting funding to fully fund the explicit subsidy. So going forward here, we're just going to talk about the explicit subsidy, but we also have to report the liability for that implicit subsidy. We typically show you the tank. This is a scale version of the tank reflecting the actual assets in the trust compared to the liability and the amount of benefits going out and the contributions and investment earnings going in, or expected investment earnings going in. We started this funding scheme when this plan was, its funding ratio was very low. It wasn't quite zero, but it was very low. And so contributions have really been far more important to building up the funding level than investment earnings. And in the last year, contributions were 10 times investment earnings. So that's kind of a flip from the pension plan where the investment earnings have been very, very important. Now going forward, that's going to change for the 115 trust and investment earnings will become more and more important. But right now, the contributions have been driving the growth. So here on the left, we have our contribution chart showing the purple is the member contributions for the current year and then projected for 2022. And the gold are the city contributions to the trust for 2021 and 2022. You'll notice both are going down. The city's contribution drops by about $1 million in this projection. The member contributions are going down because there are fewer and fewer active members who are contributing to the trust. The red line is the normal cost. That's the expected cost of the benefits for the current year of service. You'll notice that the member contributions are higher than that. That means the members are paying off, helping to pay off a portion of the UAL. This blue line we call the treadwater line. That is the normal cost plus interest on the unfunded liability. And so any contributions above that are directly reducing the UAL amount. In the pension plan, we just crossed this threshold and are contributing more than the treadwater, but more. And that's what's been driving the UAL and improved funding, or part of it. There's also been changes in healthcare costs. The right-hand side shows the funded status for the explicit subsidy. The bars represent the liability, and the blue is for members currently receiving benefits, gold members who are no longer working for the city but entitled to future benefits, and red are active employees. You can see in 2020, the liability for people receiving benefits is about 2/3 of the total. We expect that to continue to increase as members who are eligible for full benefits are a closed group. And so that membership is going down and shifting from active to in pay. So over time, that's going to continue to be a larger and larger share of the liability. The green line shows the asset level and its growth. We're currently 54% funded. That's largely unchanged from the prior year. I'll turn it to Mike to cover some of the details.
Hey, Bill,
Okay.
can I ask a question?
Sure.
Oh, good. So if you can go back one, just that one. All right, so I might not understand this correctly, so apologize if I don't. As people go into Medicare, all right, or are eligible for Medicare, let's say that, then I mean, the funded status is just what's out there, but my understanding is as they go to Medicare, the obligation is lower, right? I mean,
The annual amount, is lower because the premiums for the Medicare supplement coverage, Medicare Advantage coverages, are lower than the lowest cost active healthcare. But that's just the annual amount.
mm-hmm.
In terms of the liability, and Mike will show this in some of the charts coming up, they're receiving that smaller amount for many more years than they received the pre-Medicare. So most of the liability is actually for people who have Medicare.
It is. All right. Mm-hmm. And so it doesn't really change the right side of this, the funded status piece of it.
No, we're taking all of that projected liability into account in measuring that funded status. So we're expecting them to go from pre-Medicare to Medicare Advantage programs.
Some people who have worked for the city their entire career, though, are not Medicare eligible, right? As I understand it? No?
As a practical matter, not anymore.
Oh, really?
Because there's a change made in the law back many, many years now that while cities can and governmental entities can opt out of the Social Security piece, they couldn't opt out of the Medicare piece. So they were still making contributions towards Medicare. So the odds of you having anybody left that's not eligible for Medicare at retirement is pretty slim.
Who would not be eligible? Would it be?
It would be somebody that anymore, it's probably nobody because you only need to have 40 quarters worth of coverage to qualify, which is basically 10 years. So it would have to be, and it would really only have to be, in theory, an existing retiree who retired a long time ago and didn't have eligibility. So they would be probably in their 80s or 90s now.
So someone, I mean, if someone retires and they've had 30 years with the city and they've never worked, and let's say they're not married, so they can't use their husband or wife, so they've never paid in. Well,
They paid into Medicare though, because they've been paying into Medicare since the late 80s.
Since the late 80s.
Yeah.
Okay. All right. Thank you so much. I really appreciate that. All right.
And Bill and Mike, Brad has raised his hand. I think he has a question on this topic too, I'm guessing. Brad?
Thank you, Mr. Chair. Just real quick regarding that Medicare question, just for clarification, I do know people that are in their 60s and they were not eligible for Medicare. They did not put in the Social Security. So there are people out there that are younger that did not put into the Medicare system. So anyway, just want to clarify that. Sorry. Thank you, Mr. Chair.
Yes.
So this chart actually kind of summarizes the actual dollar amounts. And so the top table shows the contributions for fiscal year ending 2022 versus what they were for 2021. And if we start at the top for the explicit, again, as Bill pointed out, the member contribution is actually decreasing a little bit. And that's just because you've got less active members. As people retire, this number is going to continue to go down since this is a closed population. And the city's actual determined contribution actually went down slightly as well by about $1 million. And this compares to the city does have an optional cap that if the actual determined contribution is greater than 14% of payroll, the city could actually cap its contribution at that. But as you can see, they're well below that number. That number is projected to be just over $46.5 million for fiscal year ending 2022. So they're way off of that. And then the next shows the implicit subsidy piece of it increased from 5 million to 5.4, mainly due to healthcare premiums continuing to increase. The bottom chart actually shows with the development of the unfunded liability and kind of going left to right. It starts with the explicit subsidy that it's 559 million as of June 30th versus it was 541 last year. The assets, so that's basically gone up about 18 million. The assets actually only went up about $9 million in total, mainly because investment experience was less than the 6.25 or 6 2/3% expected in the valuation, which caused the unfunded liability to actually increase by about $10 million, which is why, all else being equal, the funded percentage basically remained flat between the 2 years. And then we just show the implicit because, again, we have to calculate it even though it really has no impact on the funding. The next page is one, we kind of develop this as a new chart for this year to show really where that liability comes from. And the pie chart splits it between the dental benefits, the benefits for the pre-Medicare part of the coverage, and the benefit for the Medicare part of the coverage. And the blue shows the existing retirees. The red numbers are the actives who are yet to retire, and then the little yellows are the vested terms of individuals who've left the city but are eligible to come back at some point in the future and get a benefit. And so it really shows that 2/3 of the cost is actually associated with people who are already retired. And then interestingly enough, when you take everybody into account, again, another almost 2/3 of the liabilities associated with the benefits the members will receive while they are Medicare eligible. So that shows that's really the driving piece because, again, the average for a non-Medicare piece of it is only 6 or 7, maybe 8 years versus, again, based on assumptions, on average, you're getting the Medicare benefit for 20 plus years. So even though it's a little less expensive, you're getting it for a much longer period of time. And then about 12% of it's actually due to the dental. So the dental is a small piece of it. And then the other 23% is the benefits people get prior to Medicare eligibility. Okay. Then again, this chart here shows what caused the change in the UAL. So again, the UAL went from 246 million from last year's valuation up 10 million by 256 million. And we had some reductions. Really, the liability, all else being equal, was about $33 million less than we would have expected, mainly due to the fact that the Medicare premiums went down rather than our expectation that they would go up. And that the contributions above the tread water level, which again, if you go back to Bill's earlier chart, you saw that the total contribution number was much higher than that tread water. So basically that would have cut $10 million off of the UAL. But on the other hand, investments were about $18 million less than expected, which then caused a reduction. And then assumptions, and this assumption change is primarily due to the reduction in the discount rate to 6.25%, as well as some other minor changes in the trend assumption and the plans we assume people would elect, caused the UAL to increase by $35 million. So this kind of gives you an idea of the assumption changes plus the liability experience really had a minor impact. The biggest impact is the fact that while contributions were above the tread water level to help buy it down, unfortunately investment returns were less than expected. And because they were less than expected, it basically caused the increase in the UAL. The next chart.
So like on the pension, we do projections. And so this chart is just showing the projection of the liability in the gray bars and the projection of the assets, assuming all of our assumptions are met going forward. We're expected to reach 100% funded in 2038 under that scenario. I think it's also worth noting that because this is a closed group that gets the full benefits, there is an ongoing group that gets a catastrophic disability benefit. But because the full benefits are closed, we're expected to reach a peak in the liability in about 10 years. And after that, we'll have more benefit payments going out than accruals in liability. So that's also something that's very different from what we see on the pension side. And as we get closer to 100% funded with the closed group, we'll have different questions to talk about in terms of how we're funding the plan. But that's still a ways off, as you can see. This chart shows both the historical contributions and the projected contributions. The purple bars are the member and the gold are the city. The lighter colors are the historical, and then the darker colors are the projection of this valuation. The red line represents the projection from last year's valuation. And so you can see that there's not a whole lot of difference in those projected contributions between last year's valuation and this year's valuation. This year, they're slightly higher than they were projected to be, not significantly. The big drop in contributions here was measure F, and
target because we're going to give HR the money
going forward. So, and this gray area in the background are the projected benefit payments. And so you can, this is an important thing as you're going into the asset allocation study. We're right at the point where we're crossing from having more contributions come in than benefit payments go out to being right about equal, and then that's going to shift so that we will have more benefit payments going out than contributions coming in. So we will be moving to a negative net cash flow in the next couple of years. So I'm sure we'll talk more about that when you get into the asset allocation study. But with that, we do have the model here. If you wanted to look at any scenarios, but we'll take any questions you have on the valuation. Should also say there is a full report attached to the agenda. We weren't planning to go through it, but if you have questions on the report, we'd be happy to address those as well.
Very good. Thank you very much, Bill. So on this item, we are looking for action to accept the report, but let's check. Are there any questions? Additional discussion by board members? Brad, your hand was up earlier. I don't know if that was from the last time or this time. If you have anything, you're welcome to speak now, or anyone else. Okay. Well, on this one, again, we're looking for action to accept this report. So if there are no other questions or discussion, can I have a motion and a second to accept the OPEB reports from June 30th, 2020?
Trustee Kelleher, so motions.
Thank you, Trustee Kelleher.
Second.
Second by Vice Chair Horowitz. Thank you very much. Any more discussion by the public, by the board or the public? All right, let's do the roll call vote then. Vice Chair Horowitz.
Aye.
Thank you. Trustee Chandra.
Aye.
Thank you. Trustee Jennings.
Aye.
Thank you. Trustee Kelleher.
Aye.
Great. Thank you. Trustee Sun.
Aye.
Thank you. I vote aye also, so that motion carries unanimously. Thank you very much, Bill and Mike, for that presentation. I guess you're sticking around. We've got another one coming up here too. Okay, let's go on then to item 5, new business. 5A is the oral update from the CEO, Retirement Services, Mr. Pena.
Thank you, Mr. Chair. Again, Happy New Year to everyone. If you bear with me, I do have a couple of announcements and information. First of all, I wanted to remind everyone with the 2020 just ending December 31st. January is a big month for our office where we issue the 1099 forms, which are the tax forms for all the benefit payments for all of our beneficiaries for 2020. So the goal is to have that completed and obviously mail out before the month end, which is certainly a requirement by law. So that's, I think, the overriding duty that we're working on this month. I also want to let you know we started working. That noise is not coming from mine, so I don't know what that noise is, but can everyone hear me?
Yes.
Okay, so we started working on the budget for the 2021-2022 year. The goal is to present our administrative budget request to both boards at your March meetings. Obviously, Councilmember Davis may have some comments about potential implications of the budget for the 21-22 year. But the city did share with the various departments some goals that they have. I think the deficit for the 21-22 year, if I remember correctly, is about $78 million, 50 of which are in the general fund. So they were very specific as to requests to the various departments. I believe it was about 6.53% cut on their base budget for most of the departments. There were a couple of, that included appointees and a couple of the appointees offices, the independent auditor for the police and the police and fire, that because was a little lower. But the reason I'm letting you know that is that obviously being part of the city, we are mindful of the challenges ahead. And so we will take that into consideration when we prepare our budget for March presentation to you boards and eventually to the city council in May. I also want to remind you that we do have one senior analyst and a benefit analyst position that we are recruiting on right now. They're both still open, And so we will keep you posted on what the results of that is. We welcome our new senior auditor to our office late November, and you will get a chance to meet him. Yesterday, I had the opportunity to introduce him by email to both audit committee chairs. In your case, your audit committee chair is Mark Kelleher. So we do have big plans for the audit committee, not only for the meeting next month, but for the rest of the year. As always, staff continue working from home. Some time back, we recognized that this working remotely was going to be here more for the long term than the short term. So we migrated, just as we purchased new iPads for all trustees, we did go out and purchase laptops for everyone at the office. I believe that we are more than 50% now in the process of making sure that everyone on staff has a laptop so they can work from home and they don't have to use their own equipment for many reasons, but one of which is obviously security purposes. We still haven't been able to issue a laptop to everyone, but we are in that process. And I also wanted to let you know there's two items that are we're going to be discussing later at this meeting. One of them is a contract request to extend and amend the exam works, which is the independent medical examiners that they provide services for disability. And then we also have a basic presentation on the disability process. And the reason those two items are critical is because I want to also let you know, your board has been working with a medical advisor for many years, way back for many, many years, 80s, 90s, and 2000. The city of San Diego, I'm sorry, the city of San Jose had an office of a doctor that actually provided services to the city. And they actually examined many of the safety members before they joined, even afterwards. And so for many years, both of the boards used the doctor and the examinations as part of the disability process. When that office was actually closed by the city a few years back, we issue an RFP to continue providing the boards with a medical advisor, even though this medical advisor was not going to be providing actual examinations of the applicants. At least it was going to be working with both committees and boards, providing their own report. In any case, it was a very challenging proposition. We did hire someone that only lasted 1 month, and we were lucky enough to find Dr. Tillman. Dr. Tillman had retired and in fact was the city doctor back in the 80s and 90s. So she was very familiar with the process and the retirement laws. She's been working with us for quite a few years, but her contract is expiring June 30th and she's not going to renew the contract, which means that we are going to issue an RFP for a medical advisor. Which also means that it's more critical now to have a strong contract with exam work. So you will hear a little more about that during the exam works presentation and also during the presentation on the disability process. But I just wanted to let you know, Dr. Tillman contract ends on June 30th and she is finally retiring. So she is not going to be looking to renew the contract. So by then we're going to have to either find a new medical advisor for the committees and the boards, or we may have to rely then on the examinations by independent medical advisors from ExamWorks. That concludes my update, Mr. Chair. I'm happy to answer any specific questions.
Thank you, Mr. Pena. Are there any follow-up questions from board members? Public? All right, great. Next is 5B. It's the oral update from the City Council liaison to the board. Councilmember Davis, Happy New Year. Welcome.
Happy New Year. Thank you. Not much to report. As Roberto mentioned, the departments are preparing their budget estimates. We are hopeful with the new administration that there will be some relief funding for municipalities, but of course, with the Senate split evenly, that remains to be seen. So that will, whether or not that happens before February, when we get our projections for discussion, or the March budget message for the mayor, or the final adoption of the budget in June. Things are going to be, I think, up in the air as they were last year in June. So kind of remains to be seen. We're hopeful that we'll have some relief and that we won't have to make substantial cuts, because cuts to service are very difficult, and it means layoffs. So, or can mean layoffs. Obviously, that's our last option. So that's kind of what we're dealing with, just continued unknowns.
Okay, thank you very much, Councilman Bishop. I keep my fingers crossed the new administration will step in big time for us.
Thank you.
Oh, yes. All right, item 5C is discussion on Chiron's 5-year city contribution projections for Federated Board. And is this Bill or Mike that we kick this off, or Roberto?
No, that's Bill. I can
Hello.
tell, I can't see him, but I can tell he's excited about presenting this particular item, right?
Yeah, this is just our annual letter to the city for their budgeting purposes that takes the projections that we presented last month on the pension plan and this month on the OPEB plan and puts them into a letter so that they can use it for budgeting purposes. The only thing I would note is there are pre-funding calculations in here, assuming that you use the full discount rate for a half-year discount for the Tier 1 pension and for the OPEB contributions. Obviously, the board can change that policy, and that would affect what those results are. But that's what's included here for the city's budgeting purposes.
Bill, just so that I'm clear, the numbers include what you just explained. It doesn't include the half through the year, making the payments every other biweekly, or does it include both numbers?
It includes both. Hold on.
Okay, good. And that was the case for police and fire as well?
We haven't done police and fire yet.
But that will be the case for police and fire. That's correct. They are lagging. Usually they're ahead of Federated, but this year they're lagging a meeting behind Federated. So yes.
Right. So
Okay.
here's the prepayment options we've shown.
Okay.
Tier 1 beginning of year or semi-annual payments, and then OPEB the same.
Okay. And semi-annual is equivalent to making payments throughout the year.
No, it's not. It's making
It's
making a July 1 payment and a January 1 payment.
Okay. And where is the number for instead of pre-funding making payments throughout the year? Is that also there? There you go, throughout the year. Thank you much. I just want to make sure that the city have both options.
And figure out
Appreciate
what
it.
at mid-year kind of counts towards that. And then, yeah.
Okay, good.
And then assume.
And this one, Roberto, you do not need action from us. This is a discussion item, or do you need us to accept this in order for you to forward it to the city?
I believe I'm now let me take a look at the agenda. I believe this is just discussion.
Yeah, just the agenda says discussion only.
Yeah, it's just a discussion, just so you have information. I will make sure that I will forward. I know Cheryl Parkman is I attended the meeting, but I will make sure, I always make a point to send this information to the budget director to make sure that they have it. So thank you.
Okay, very good. Thank you, Bill, for that one too. Next is item 5D, discussion and action on assumptions for 2021 actual equivalents based on the June 30, 2020 evaluation assumptions.
Excuse me, Chair. This is Trustee Zhang. Can I ask a question before we go to this item for the previous one?
Okay.
So, Bill, I have a question for the semi-annual payment. Just wanted to make sure the semi-annual payment is the total of those two payments, right? For instance, for 2022, if the city choose to make 2 payments for pension, the total of the two will be $185.5 million.
Yeah.
Okay. Thank you. That's all.
This is Trustee Jennings. I just wanted to ask one question. If they pay it all up front versus the monthly payment, what's the savings of them paying it, pre-funding it for the annual amount? I didn't see just.
Yeah, could we bring that? It is on that chart, but
I know.
I'm not sure who's managing that.
Bill is doing that.
Okay, yeah.
I closed that one, so let me bring it back.
Ms. Jennings, in the meantime, and I have to say, Trustee Sung can probably speak a lot more eloquently about this than I can. The whole purpose of the city pre-funding early in the July is because the savings are higher.
Right.
But of course, I think as CIO Parlani indicated, the boards have to agree to what that particular discount rate is going to be to provide that savings. So that could impact the amount. I think that's what Bill was referring to, that could impact that amount. So I'll turn it over to Bill so he can explain what the delta will be between the two approaches.
I know the budget office counted on, or they used the pre-funding last year as a cost reduction. I don't know if it was part of the proposed budget or when they were doing the adopted, but it was substantial. I remember it was large.
So last year, they got a discount that was equivalent to a half year of interest at 6.75%.
Right.
And so this year, the discount would be a half year at 6.625.
Okay.
That's what we're showing in this letter. But as Prabhu indicated, he's coming back next month with a recommendation for how you actually handle this year's discount. You've had a policy in the past that after an economic expansion, you reduce that discount by up to 45%. So, but there are other factors to take into account in how well you can invest that lump sum if you get it all on July 1st versus the liquidity of managing benefit payments. So I think those are the discussion items that will come back next month to look at the discount.
So where on here is the difference between the pre-funding or payment throughout the year?
We don't directly draw the difference. We have this chart here that shows payments throughout the year.
So it'd be 226 for 20 year. All right, so that's 226, right?
Right.
And then what was it if they pay?
And then, so, and then these are, well, that's the summary chart. We do break out in more detail and they do not pre-fund the tier 2 contribution because members don't pre-fund their contribution and the contributions are supposed to be equal. And so the city makes its contribution at the same time the members do for tier 2. So it's only the tier 1 that gets pre-funded. And so it would be 182.5 to pre-fund the tier 1 pension, 185.5 if they made semi-annual payments.
On the monthly one, was it, did that include tier 1 and tier 2 or was that just?
That did, but here's.
So what's the tier 2? So
here's the breakout.
Okay.
For tier 1 versus tier 2. So,
17.5.
Tier 2.
202 plus 17.5. That's 219.5 versus the monthly is 226. So 226, if I just round this, 220. So it would be based on what we see here, if they paid it annually, about a $6 million savings. based on these charts. Am I doing that right?
I'm sorry, I was looking ahead, but I think so. What you were describing was correct.
Okay, cool.
And of course, this is just federated. This is a similar approach to police and fire. So the city usually accounts for the total contribution of both plans.
That's true.
And the city also, they take, the budget office takes this detail because depending on the number of positions they fund, they'll come up with different numbers.
Right.
Because the normal cost rate applies to the total payroll, and the UAL is a fixed dollar amount. So they do their own calculations in the budget process.
They do.
Plus, for Federated, only a portion of the contribution comes from the general fund. So this letter is to give them all the components for them to put it into their model to calculate the impacts on the budget.
Very good point, Bill. Thank you.
This uses our assumptions, and this assumes people are getting 3% annual increases.
Correct.
And that is still to be told what the budget office will do. Okay. All right. Thank you so much. I appreciate it.
So with that, then Bill, could you go ahead and take care of 5D, the assumptions for 2021?
I'll stop and reshare because I think I have to do that to bring up the right.
Thank you.
So this one, whenever someone retires, they have various optional forms of benefit they can choose, and the options depend on their circumstances and whether they're tier 1, tier 2, and with tier 2, their COLA depends on how many years of service they have. Those different optional forms are set to be actuarially equivalent, meaning that they have approximately the same present value. And so that calculation is based on assumptions, and the municipal code says it shall be based on the assumptions from the prior year's valuation. So for 2021, it's based on the assumptions from the 2020 valuation. But the municipal code also says that the board shall adopt a resolution adopting those assumptions for actuarial equivalence. So that's really what's here today is 5D is a memo and 5E is a resolution. There's not really any discretion for the board other than technically the mortality blend. For these calculations, we have to use a unisex mortality. In the valuation, we use different mortality for males and for females. We have, last year we actually looked at this, and the breakdown in the Federated plan then was about 55%, I think 55% male, if I remember correctly. But we decided to maintain the 50-50 blend for simplicity's sake. And so we're suggesting you just continue with that. The only updates to the assumptions are the pieces in bold, just reflecting the changes in the valuation, both to the discount rate, and we update the mortality projection scale every year. So that's all that's going on here. It's just kind of a pro forma thing. There's not much discretion for the board, but we need you to adopt the resolution.
Okay, thank you, Bill. Any questions from board members? So let's act on these separately, 5D and 5E separately. So first, we have a motion and a second to approve the assumptions for 2021 actual equivalents based on the June 30th, 2020 valuation assumptions.
This is Trustee Chandra. I'll make a motion. So moved.
Thank you, Trustee Chandra.
This
Trustee
is
Kelleher-
Trustee Song. Oh, go ahead.
Trustee Kelleher seconds.
Thank you, Trustee Kelleher for the second. Any other board discussion? Public discussion? Let's do a roll call vote. Vice Chair Horowitz.
Aye.
Thank you. Trustee Chandra.
Aye.
Thank you. Trustee Jennings.
Aye.
Thank you. Trustee Kelleher.
Aye.
Thank you. Trustee Sun.
Aye.
Thank you. I also vote aye. That motion carries 6-0. And then the accompanying resolution. Again, if I could have a motion and a second to adopt resolution number 9096 on the actuarial equivalence assumptions.
This
So
is Trustee Song.
Thank you.
Motion to adopt the resolution.
Thank you, Trustee Sun.
Second, Trustee Horowitz.
Vice Chair Horowitz, thank you very much for the second. Again, any discussion by the board? Public discussion? Let's do a roll call vote. Vice Chair Horowitz.
Aye.
Thank you. Trustee Chandra.
Aye.
Thank you. Trustee Jennings.
Aye.
Great. Thank you. Trustee Kelleher.
Aye.
Thank you. Trustee Sun.
Aye.
Thank you. I also vote aye. That motion carries unanimously 6-0. Bill and Mike, thank you very much for coming and for the work on that.
Thank you. Happy New Year, everyone.
Happy New Year. Happy New Year. So we had talked about a break. Mr. Pena, are we good to take the break now still?
I think we are. It's up to you, Mr. Chair.
Okay, let's, I have 9:44, so let's come back at 9:50 for the disability training. Thank you, everybody.
Sounds good.
So we are now moving on to item 5F, the presentation by staff of the retirement disability process under the Federated Employees Retirement System.
Thank you,
Mr.
Chair.
Pena,
Yeah,
okay.
so let me kick it off. Thank you, Mr. Chair. We have Barbara Heyman, our Deputy Director. She will be providing the board with a presentation. And obviously, we also have Stacy Fisher. She's our benefit analyst that works for the disability applicant. So she certainly will be available as well to answer any questions. So just wanted to kind of give you a 2 minutes background on the presentation. You may recall some time back that, first of all, many of you are fairly new to the board, and even though we do have an onboard process, I acknowledge that we have not done a very good job in that onboarding process on providing enough training on the disability side of the equation, which have made it challenging for you board when we have dealt with disability hearings in the last 6 to 9 months. So the chair reached out to staff to make sure that we put together a training for you board on disability. And so that training really is based on 2 phases. This is the basic training, sort of to introduce you to the concepts and the process. We do have a second phase where we will probably be a little more specific on the actual reports and the disability decision making. And so we will certainly try to time that particular training closer to whenever you have to deal with disability hearings, so that you have that knowledge just in anticipation of the hearing where you have to make a decision. Before you, as you can see, there are quite a few documents. We were not expecting you to go in great detail to all of them, but certainly I think this is something that provides you with the basic framework that you need to have to understand our disability process. And so as we go to the presentation, and even after the presentation, if you have any specific comments or questions about not only the presentation, but these documents, let us know and we will address them for you. Again, there's a lot of information on the presentation. I think Barbara is going to be very succinct on her presentation. She's not going to read all the information that is in there. What we want you to get out of this is just an understanding of what are the basic definitions, and also what is the basic process looks like for the disability training, for disability process for a member. So with that, I'll turn it over to Barbara.
Thanks, Roberto. Yeah, so as Roberto mentioned, there are definitely supplemental documents that were provided, but for right now, if admin could open 5F2 O2 training. Yes, I believe, yes. So that is going to be the start of this presentation. And as Roberto mentioned, this is giving, a high level overview of the disability process and introducing you to some of the definitions. So moving on to slide 2. Here, we're showing you how disability is defined. So obviously we look to the San Jose Municipal Code, and it defines disability as an incapacity for the performance of duty where the following criteria are met. So, the disability, it's permanent or for an extended and uncertain duration. It's occurred while the member was an employee of the city and in Federated City Service. And the disability occurred as a result of an injury or a disease. So that's basically disability. So moving on to slide 3. Now we're going to delve a little bit further. It doesn't just mean the mere physical or mental inability to assume the responsibilities. In addition to not being able to perform the responsibilities and the duties, and and functions of their position. Also, they can't perform the responsibilities and duties of any other position in the same classification of positions to which the city may offer to transfer them. So there's no other job in their classification that could be offered by the city for them to work in and continue to work. And important to know, the disability, it must be determined by the retirement board, and it's based on competent medical opinion. And yes?
Barbara, I'm sorry, I just wanted to jump in on the second bullet point here because, well, two things I wanted to say. The first one, Barbara, all these definitions and information are in the municipal code, and I wanted to remind everyone that have the onboarding in our office. We introduce you to our Confluence application, which you have on your iPad. That Confluence application have a lot of information and documents that you can refer to, one of which is the municipal code. So you can actually refer to the specifics of that code section by going through your application and Confluence and accessing that particular document. But I also wanted to mention on the second bullet point, this is a critical piece of information. If I'm mistaken, Barbara and Stacy, please correct me. This is critical in that we, as in the office, your board, and your general counsel, has provided us with direction as to what does it mean any other position in the same classification of positions. And the reason I'm raising this issue is because it came up. It really has come up on your last two disability hearings. And that position that we're taking may or may not be the same position the city is taking. I am not sure where the city is at on that issue. My understanding was they were going to be reaching out to their city attorney's office. I haven't heard back from them. I only wanted to pinpoint that issue because that has been the issue at hand in your last two disability hearings. And so it's something that if it comes up again, the committee and the board should make the decision on our general counsel recommendation or legal interpretation, which is in the same classification, which may or may not be the same definition that the city may have. So I just wanted to point that, and that was it. Thank you, Barbara.
Good clarification.
Can I say something, Roberta? Don't we have to do what the Munich Code says? I mean, I don't understand that.
Well, Julie, I am not an attorney. I leave that to Jenny to address, but you can imagine that attorneys have different interpretations of what legal interpretations could be defined from a particular write-up. And that's all I'm trying to say. It may seem to be pretty straightforward, but again, people with a very good and intelligent minds tend to differ on what those interpretations may be. So I think that's all I'm getting at.
All right, just how we interpret it. And so if our legal department says that it's okay, yeah, we always go with that. Usually, at least I do. All right, thank you.
So thanks. So now that we know how disability is defined, we're going to move on to the next slide, which shows there's two types. Obviously, there's a service-connected disability, and that's where a member, the disability arose and results from an injury or a disease arising out of and in the course of federated city service, as opposed to a non-service connected disability, which occurs when it's not job related. So maybe if I could give you some examples, for instance, for a service connected, if we take like a painter, and perhaps as when they're performing their painting duties, they're involved in an accident where the scaffolding collapses, they sustain an injury, a horrific injury, rendering them incapable of continuing to perform their painting duties. So that could be a service-connected disability, as opposed to, again, we'll take the same person as a painter. They are enjoying some recreational activities on a weekend. They're involved in a horrific sporting accident. They can no longer perform their duties, and there's no other duty or no other jobs that they could perform in that same classification with the city. That would be a non-service connected disability. Hopefully that gives you some idea of the distinction between the two.
Barbara, this is Trustee Jennings. When I read through this, then my interpretation is if it's non-service connected disability retirement, I guess they're not eligible for a service-connected disability. Does that mean they can't? I'm a little confused. Does that mean that they cannot go through the retirement system, or maybe just help me?
Well, so the applicant would put in a disability application, and the board's going to determine whether it's service-connected or non-service connected. For instance, the example I just gave, the painter for the non-service connected disability, his injuries were nothing to do with his duties as a painter of the city of San Jose. They purely were the result of a non-work related incident. Does that?
I have something to add.
Oh yes, please, Stacy.
There are two blanks on the application. One is for a service-connected disability retirement, and one is for a non-service-connected disability retirement. We do receive applications that are just for a non-service. They might have cancer or another medical condition that's going to be a non-service connected. The other instances, like what Barbara said, where the board may rule and find for the incapacity and the disability, but not for the service connection, in which case the non-service connected disability retirement would be a good option.
Does that answer your question, Trustee Jennings?
No, I mean, I guess I haven't dealt with this too much, so I'm a little confused. If it's non-service, like the person has cancer, has nothing to do with service, and they're eligible for retirement, let's say they can retire, wouldn't they just retire?
So and I'll try to explain that one quickly, but Stacy probably knows more about it. I think as part of the documents that we provided, Stacy, correct me if I'm mistaken, it did include some of the benefits related, right? The calculations of the benefits, right?
Yeah,
some of the information was provided. Yeah, the fact sheet. So that would tell you, you are correct, Trustee Jennings. Someone may have a disease and they may be better off service retiring than not. But there are situations where people may have a disease that have not made the qualification to retire for service, in which case retiring for non-service will be the only way they can start receiving a benefit. Right? Does that make sense? Because you have to be a specific age and have so many years of service to meet service retirement. So there are situations where someone may have a disease. Say I've been working for the city for 7 years and I'm 45 and I develop cancer. I'm not going to meet a service retirement, but I can retire on a non-service connected disability.
Right. So again, I guess I was kind of being black and white on it. If it's non-service connected disability, they would need to go through the regular retirement if that's what they need to do, but they cannot. And I think there's a wiggle room here, which I don't quite understand. But if it's non-service connected, then they are not allowed, they cannot go through the service connected disability.
No, that's not the case. So when you file for the application, you either file for a non-service or a service. When they file for non-service connected disability, it's sort of like a straightforward. That's all they're filing for, most likely because they cannot meet the service retirement requirements and they do have a disease, and it is not, I would say it's extremely likely that the board will find them to be disabled and they can retire, and that's the end of the story. I think what you're referring to is cases where a member may file for a service connected disability and the committee and the board may find them to be disabled, but not on a service connected basis. In which case, we offer them the non-service connected disability, and they can choose whether or not they want to take it or not. That's really their choice. Following the example by Barbara, imagine that a member, the painter that she's referring to, did file for service connected, but we found out that really the injuries that he or she sustained were not from working at the city, but because she or he was having these sports activities after the city, right? But the person didn't want to say that. Well, if we find that that's the case, then the board is going to find them to be disabled, but in a non-service connected basis, and either they can choose to take it or not. Usually speaking, when they file for service connected, they may have already met the service retirement requirements. And so they may just choose to continue with the service retirement, and that's it, and that's the end of the situation. In other cases, like in Pisuri, right, you saw, they continue the process, and so they may or may not continue, and they may eventually get the service connection or not. They always have the chance after your board decision. If your board is not in line with what they're requesting, they always have the ability to go to Superior Court to challenge your board decision. That's why it's so critical that your board understand the process, understand the requirements, and that we have good documentation for the decision that your board is making.
Okay, so what is the difference between non-service connected disability retirement? And I guess by I say difference, I mean in rule and like payment between non-service connected disability retirement and just I'm retiring.
I think that Stacy can answer that better than I can. Go ahead, Stacy.
Primarily, the applicant is under retirement age. They may have enough years, but they're under retirement age and they can't work. So that's going to be the primary situation.
Okay. All right. So it gives them the ability to retire under the age of 55, or depending if they're tier 2, 62 or whatever it is.
Yeah. Yes, correct.
Okay. All right. That makes a little more sense for me. I mean, I'm not a benefits person. I don't operate in that world, and it's just not my expertise.
That's why we're having the training this morning. So thank you for the questions.
All right. Thank you.
Very good questions.
Okay.
So
this is the trustee Sun. Can I ask another question?
Oh yes, trustee Sun.
What's the difference in benefit between service connected disability and non-service connected disability? We had a situation when, and I think several months ago, when a retiree, he's obviously being retired for some time. He's coming back to the board to argue for the case for service-connected disability retirement. So I'm not so sure what's the incentive there.
So the big incentive there, trustee Sun, is a tax issue. When you are found to be disabled on the service-connected disability retirement, a large portion of your benefit will be tax-free. So it may not impact the benefit that you're receiving, but it does impact the taxes that you will have to pay on that benefit.
Really?
Correct. Yes.
So if you have a service-connected disability retirement, you don't pay taxes on the money you
portion.
So in a portion. So I'm gonna just give general numbers. They may not be completely right, but they'll be close enough unless Stacy will tell me, Roberto, what are you saying? So say that you have enough working years and age that you can retire with 75% of your final average salary as a member of Federated. So say you final average salary was 100,000, and now that you can retire 75%, your benefit will be 75,000. Now let's assume that out of that you find to be service connected. So 50%. How
No,
much of
Roberto,
that?
it's
Go ahead.
40%.
40%. Thank you. 40% of the 75,000, Stacy?
Yes.
Okay. So out of the 75,000, if now we are finding you to be service connected with disabled, then 40% of that annual 75,000 benefit will be tax free. So two things. Number one, going forward, out of the 75,000, you're gonna only be paying taxes on 60% of it, right? But number two, presumably it took some time. Let's assume it took a year between by the time you service retire and the decision that was made by the board. Then we will have to readjust what you have received, or the person may have to refile the taxes because their taxes for the prior year were not accurate as they were really deemed to be service connected, so they can get a refund for overpaying taxes. We don't provide that kind of service or analysis to the members, but that's usually what happens. I mean, generally speaking. Is that correct, Stacy?
Yes, that's correct. And I wanted to add one point. A common situation is for a person to be, and it's like you observed, Trustee Jennings, that the person is on a regular service retirement, and then they're coming through for a service-connected disability retirement. It's a common situation. If the service-connected disability retirement gets approved, it will be effective, retroactive back to the same effective date as the service retirement. And it's a common situation. It comes up often.
So per Trustee Sun's question, which is a very good question, it's really the tax deferred side of the house that is what they're after?
That's correct.
Yeah.
Okay. Now, if you have a non-service connected disability, is that the same tax deferred situation or?
No, it's not.
We have a slide coming forward pretty soon, don't we?
Okay, that explains that.
But not on this tax relation tax.
Okay.
But no, non-service, there's no tax
benefit
or tax exempt.
The final three attachments are excerpts, and they illustrate, they articulate the calculation. So questions about the calculation and the 40% tax break are on those last three attachments.
Okay, so to summarize, service-connected disability retirement provides a tax benefit of 40% of your payout. Non-service connected disability retirement provides you the ability to retire earlier than the age limit, if you're tier 1 or 2 tier, depending how that goes. And those are truly the items that drive it. Yeah?
Correct, yes.
Okay, cool.
In a nutshell.
In a nutshell. Yeah, I like that. All right. Thank you. Thank you, Trustee Sun. I appreciate your question too. Sorry for jumping in on it.
No problem.
So now, so those are the two types of disability retirements: service connected. So if we now move on to the next slide, the board's going to make the determination based, if it's service connected or non-service connected, based on the medical examination and available evidence and information. So
before you move from here, Barbara, I want to say something on this slide again. I mentioned that on my audit report. In years past, before the city deleted the doctor's position, the doctor for the city actually provided the medical examination and provided the committee and the boards with the medical analysis. Once that position was eliminated, we lost that medical examination, which is the main reason why we have ended up hiring services like Exam Links, right? Barbara, that's the name?
ExamWorks.
ExamWorks, because they provide the medical examination. We still have Dr. Tierman. She takes all the medical examination from the IME and all the medical examination, medical information from the applicant's physician. She reads all that information and draft a medical analysis for the committee and the board, which is what we use and your board uses to determine whether or not the person is disabled, and if it is disabled, whether it is not is on a service-connected basis or non-service connected basis. Thank you, Barbara.
So now we'll go to our next slide. And this is step one of the disability retirement process. So it's a 7-step process. This is step one, and that's where the application is coming in. So the members submitting their application for a disability, and they can do that while, well, they must do that while they're employed as a Federated City employee, or within 4 months of separating from the Federated service, or during the continuation of the member's disability, if it continues after he or she leaves Federated service. So if we go on to our next slide.
So before you go to the next slide, Barbara, oh, that's okay. I just wanted to touch base on this. In most cases, members file when they're still an employee. There are some situations where they file after retirement, but within the 4 months. I'm only saying this because there are situations that you may have seen, maybe not lately, but it could happen, where the person may have been retired for a year after retirement and they file for the application. And you may ask, why did we accept that? It is usually the requirement that the member have to show that, yeah, it was after the 4 months, but they have been suffering from the disability for a long time. And they only realized that they were really getting to a point that they couldn't manage it after, you know, or whatever, after the 4 months. And so they fight the disability. I'm kind of lost here for an example, but I'm trying to think one example I can give, maybe not the best one, but let's assume that we had a member that was working in the city, and this person was working in and doing construction, so fixing or maintenance buildings that had asbestos, right? And, you know, obviously they developed that disease related to working and being exposed to asbestos, and they may not have realized it right at the time, but down the road they realized that they have been developing this disability of on asbestos for a long time. Well, that may be a situation where we may be required to accept the application. Maybe may not be the best example, but that may be a situation where, although it doesn't happen often, where a member may file after they were an employee and after the 4 months of separation, as long as they can prove that the asbestos and working in that kind of environment was what caused them to develop that disease. And it certainly will be service connected because it was as a result of their work within the city. Is that a fair example, Stacy?
Yes, thank you. That's great.
Thank you. Thank you, Barbara.
So the application has come into our office. ORS are now going to send out an acknowledgement to the applicant to acknowledge receipt of their application, and also provide them with an overview of the process checklist so as they know what to expect. And in addition, now ORS is going to send notifications to the applicant's department, telling them that we've received an application for disability from an employee or ex-employee, and we'll request a memo from them stating their current work status. If the applicant has already separated, we'll ask for the work status of separation from the city. So next slide. We're now on to step 2 of the process, and that's completing the file. So as part of the application, the applicant will have consented to provide all medical information under the control of the city, in addition to any claims from workers' comp, any proceedings, to the extent the law permits. So they've already given us their consent, so we'll go and gather that information.
Okay, and just to add, Roberto, when we had that last case, that one gentleman,
Mhm.
we did not get all the documentation, right? He didn't want to give it to, or whatever. There was some, I remember that. So,
Yeah, it's kind of fuzzy in my head, but I think a long time has passed, and I'm not sure that we had all the information. And I think one of the challenges when your board made the final decision was I wasn't sure that even if your board decided not to make a decision and wait until later, I wasn't sure if we were going to be able to find any other kind of documentation because of the time that has passed. So you're probably correct, but I do want to say something here. We are mentioning workers' comp. Workers' comp is an issue and a process within the city structure. We are not in any case somehow related to that process. That's HR and the city, and they have the third-party vendor that they use for the workers' comp. And what happened is, and Stacy, if I'm mistaken, correct me, I think the bulk of the applications that we receive are service connected related. And if it's service connected, then that means something happened within the city where they're working at the city, which means there's going to be workers' compensation claims because they are work related. If this was a non-service, they probably wouldn't be any workers' comp claims. So this is in here, but I wanted to make the point number one, that is something within the city structure that they have to provide us the ability to get information. And number two, that that this is in cases where there's a service connection. If it's something that happened completely outside the city purview and it's non-service, we still will get physician reports from the applicant's physicians, but there wouldn't be any workers' comp claims. Is that correct, Stacy?
Yes, that's correct. It'll show on the next couple of slides, but
Okay.
we for the service connected ones, I do a direct inquiry to Intercare for all the medical records. They provide me with all the medical records.
And
If it's
Intercare being one of the third-party vendors that the city uses, right?
Yes, that's correct. Yes.
Thank you.
So yes, and just to follow on that point, if we go to the next slide.
Barbara, Brad has his hand up. Could you?
Oh, I'm so sorry.
Brad, go ahead. You have a question too.
Thank you, Mr. Chair. Just real quick, with regard to HIPAA regulations and the background files that the board members receive when they hear disability cases, I remember back in, I guess it's kind of prehistoric times now, when we used to have a lot of paperwork and the board members would hand in all their background material back to staff to make sure that the privacy was paramount. So how do you ensure that when you disseminate all this information electronically, how do you guard against making sure that all this confidential information isn't somehow compromised?
I can say something on this a little bit, but I think our admin staff might want to comment also. The documents to the board are transmitted through Legistar, I believe, which is a secure web portal. These secure web portals have become a very valuable tool in the remote workplace. That's how I'm receiving the medical records from the workers' comp carrier. They have their own secure web portal and they upload their records for them. Then I can pick them up and I need a password to get into it. And it's all, and the security is much better than, say, sending them through email.
Thank you, Stacy. Linda or Michelle or Marty, is there anything? Does that sound about right? I mean, we don't make it available just like we do in the board meetings, just like we do public documents. Is that correct?
That's correct.
That's correct.
Okay. All right. Very well.
So yes, continuing on now on step 2, we're still completing the file. And if the member has, as Roberta was saying, if it's a non-service connected disability, the member will provide us the medical records that are applicable to the disability or the injury or disease that is being requested. If it is a service-connected disability, then as Stacey said, she's going to go out and request the records from workers' comp into care, and she prepares them for distribution to the independent medical evaluator and the board medical advisor. And obviously, if the member thinks it's applicable or appropriate, they may even provide for this service connection some medical records that they have from perhaps private physicians or surgeons that are not through workers' comp. And moving to the next slide, we're now on to step 3. And this is the independent medical evaluation. So as Roberto has mentioned, we have got ExamWorks. The board is contracted with 2 IMEs, ExamWorks and MedLink. Primarily we use ExamWorks as they are one of the biggest, and they've got like over 300 physicians throughout the state of California. So here, the file submitted to the IME, and the IME will review the file, examine the applicant, and then they'll produce a physician's report. And then we'll go on to our next slide, step 4. So once the IME has finished their portion, that information is then moved to step 4 to the board's medical advisor for their review. And Dr. Tierman, who is your board medical advisor currently, they're going to provide a summary of the file, conclusions on the disability or the incapacity, and the service connection, if applicable, and establish work restrictions.
Yes, if I may, it was a question. If I may, on this one, just wanted to remind the board during my other report, I mentioned that the contract with Dr. Tierman ends on June 30th. We are embarking on a process to issue a request for proposal for board medical advisor services. We were not that successful about 4 years ago. In fact, we only found one person who actually worked with us for about a month and they quit. I think we're going to be reaching out to our peers across the state to see what options are available for a board medical advisor to work with the boards. But I just wanted to make it clear that there's a very good likelihood that we may no longer be able to find that kind of service as a board medical advisor that only works and provide analysis directly to the committees and the board. And if that's the case, the process will change a bit in the sense that the committees and your boards will have to rely on the independent medical examination or IME report going forward. No, there's nothing wrong with that. That's exactly how I've been sort of mostly used to work when I was in the Fresno County. When I was in Bakersfield, they had a board of medical advisors within the county health office. But in any case, that may be a possibility. We will certainly keep you posted on how the RFP is going and how successful we are. But I wanted to make that point clear, and hopefully we'll come back before you with both Disability Council and Dr. Trima one more time before she leaves to provide the second portion of this training. But that is a real possibility that we may have to deal with. Thank you, Barbara.
Okay. And so this is, again, just remind, step 4, we're on the board medical advisors review, and the doctor has produced a summary file, conclusions of the incapacity, and established the service connection if applicable and also establish some work restrictions. And so then if we move on to step 5, now we need to see if these restrictions can be accommodated. In other words, if does the city have another position perhaps that in the same classification that could be offered to this applicant? And so, so in practice, the board medical advisors' work restrictions are sent in a memo from ORS to the city, the return to work coordinator at the Office of Employee Relations. And then OER, Office of Retiree Relations, will respond via memo advising if the restrictions could be accommodated in the applicant's regular position or in any other position within the applicant's job classification.
Barbara, before you move to the next slide, let me, because I think this is critical again, it's just in the same length of what I was explaining about the applicant job classification. We have a very specific explanation by general counsel on that, and we don't know where the city stand on that. Number 2, we did share this presentation, Jenny, with Harvey, and Jenny and Harvey had a question. And I just wanted to make it clear, when the member goes to see their own physicians or the workers' comp doctors, they issue work restrictions, right? This is, you have to imagine this process of being a 6 to 2 year process. So first the member goes to the workers' comp and they go to see a doctor, and the doctor issue work restrictions, and then they work with the city to see if the particular department can accommodate those work restrictions. So imagine this a year and a half down the road, or even more, like the member has already retired and they are getting service retirement, and we're dealing with this. Our board medical examiner issue her analysis, and they're going to issue work restrictions. Now, these restrictions may be exactly like the restrictions that were issued originally by the workers' comp people or any other doctor, but it may differ, right? If it's the same, then obviously that's easy. The board may or may not decide the person is disabled, and then whether or not there's a job in the same classification, and that will be the information that you board need to make the decision. But in situations where the work restrictions by your medical advisor is a little different, that's when we have some issues, right? Because then you're going to be making a decision most likely based on all the medical evidence, including your board medical advisor, which work restrictions may not be the same. And then the question is, we have to ask the city now, after everything that happened, could you have accommodated those restrictions at the time? And that's where the applicant job classification comes into play. So it is a challenging process, especially because of the timeline, but I just want you to kind of think about it in those terms. And that's where then eventually your board has to decide, like in the last couple of instances, you have decided that the person is disabled because the city had not been able to provide another job classification, or they would have not been able to provide another job, another position to the applicant within the same job classification. I just wanted to make that point clear because that's a big distinction that has to be made. Thank you, Barbara.
Oh, good, thank you.
Roberto, just, on the job classification, I mean, and Jay, you might have more info on this because I know you have this background. Usually, like if, and I'm just thinking, not this, but more like if someone's bumped or someone, has an opportunity to get placed after being, the position's deleted, they can go lower down they can't go higher, but they could go lower. So maybe they were, a grounds worker, but maybe they could, all they can do now is desk work. So maybe they could be like an office specialist or something, someone who just, handles computers or like they could have that capability. But the thing is if they could step down the ladder, that's allowable. Sometimes if it's tested, they have to take a test to pass that. Can that happen in the retirement world, or does it have to be within that job class?
I differ a little bit to Jenny here. I don't know to what extent, Jenny, you've spoken to Harvey, but let me answer the question the way I understand it. The answer to the question, straightforward, Judy, would be no. That's not an option. It may be an option when the position is deleted, but my understanding here is that the city has to be able to provide the applicant a job within the same job classification. A step down would not be within the same job classification. Now, that's aside from the fact that the member, maybe you find a member that really don't want to retire and they want to take it. That's a completely different issue that could be worked out. But generally speaking, that's not the way this is defined. It has to be within the same job classification. In your example, your board will have to find the applicant to be disabled. Jenny, I don't know if you have any other comments on that or.
Yeah, and that's correct. And that's really just based on how, your plan defines the benefit. And so because it's got that reference to the job classification, that's what triggers it. So you could have a different context where maybe a different classification was relevant, or you could have a different plan where it was relevant. So it's not like it's a legal requirement that we would have to do it this way. It's a requirement because that's what our plan says.
Yes. Although, Julie, I think the city will tell you that they feel that they should be able to. Whether they're going to push that or not, I don't know.
It should be able to go to a lower classification.
I think they feel that will be the case. But again, as I said, they were going to pursue further legal clarification from the city attorney, and I don't know where they are on that issue, to be honest.
Is this something the board can change? Are we able to change? Well, because it was like the Muni code says something, but.
Yeah, we can't change the Muni code.
But
the board cannot change the Muni code.
And he was talking about it's what, our plan says.
Yes, I think Jenny was referring to, as we indicated, the presentation, we started with the section is 3.2a, something within the Muni code. Is that right, Barbara? Right? That's how we started?
So it's the Muni code. So we can't change the Muni code. It has to be city council changing that.
Yes, exactly.
Just to clarify, when I say the plan, I mean the Muni code. So the provisions of the code that govern our plan.
Thank you, Jenny.
So, so we're on step 5, and we've determined if work restrictions could be accommodated or not. So if there is an alternate job in the applicant's same job classification. Now we need to move on to the next slide, and that's step 6. And this is where the disability committee hearing is going to take place. So ORS will schedule a committee hearing, the applicant is agendatized, and the hearing committee comprises of the CEO, typically the benefits manager, deputy director, one or other, also the board medical advisor and the board legal advisor. So that's Russ Ricada. So after the case is heard, we'll move to our next.
So, no, before we go to the next slide, let me say something here, Barbara. 2 things. The committee is actually just comprised of the CEO and either the benefits division manager or the deputy director. It just so happened that the way the process works, we do have Dr. Tillman and the board legal advisor on disabilities, Russ Ricada. They provide some information and reports that helps the committee make a decision. I know all of you have a lot on your plate and you have a lot of work, but I just wanted to take this opportunity to mention that your board, before I came into place in 2013, before all of you joined your board as trustees, decided a long time ago that you are not going to create a disability committee of the trustees, that it was going to be of the staff. I'm here to tell you that, just politely suggest that you think about the possibility of whether or not you want to consider creating a committee of yourself. I think for 2 reasons. The first one is that by creating a committee of trustees, disability would really, really allow you as trustees to develop a stronger knowledge of the disability process so that, number one, you can make recommendations to the board, but second, when it comes to the board, I think the board as a whole will be better prepared to make those decisions. And the second one, obviously, I think is for efficiency purposes from the standpoint that I just, part of it may be training, but I had just felt over time that your board and the staff had not been in sync, had not supported. I mean, there's been quite a few decisions the last few times over the last couple of years where the board has gone against the staff. And it seems to me that your board will be a lot more likely to accept input from your colleagues as part of a committee than from the staff going forward. So because of those two issues, I will politely ask you to consider whether this is something that you want to entertain going forward, the possibility of creating a disability committee of 2 or 3 trustees rather than coming from staff. It does not mean that staff will not be involved in the process. This Police and Fire have a disability committee, and all these people that you see here are involved in the process and comment at the committee level and make recommendations. It is only strictly that when it gets to your board, if you do have a committee of your own trustees, they will be making the recommendation rather than staff to your board. That will be the main change. So just wanted to make that comment.
CEO Pena?
Yes, Trustee Horowitz.
In that situation, then would the committee conduct the hearing with the applicant and recommend a finding, and there would be no hearing at the full trustee level?
No. Well, yes and no. If you're deciding that is an approval, it will go on consent, and then that's right. There will be no hearing. But there's always the committee could do a hearing and recommend against it, and the member always have the chance to come before the board for the full board to listen to have a hearing. So it will also require that you have a hearing at the board level.
Okay, so the applicant themselves could request to have a hearing both at the committee level and at the full board level.
Yes, the truth is that at the committee level, you know, I'm a little hesitant to call it a hearing because it's a little more less formalized, the discussion. You know, supposed to at the board level, where you do have a script where you ask a very specific questions. But it's very similar. I mean, when the applicant goes to the committee, they usually, if they do have an attorney, they will be at the committee meeting with the attorney, just like they do at the board level.
Okay, thank you for suggesting that. Perhaps that's something the governance committee would need to.
Yes, that would be something the governance committee. So that's something that the governance, if your board feel that this is something that you want to consider, you could certainly at the end of this presentation suggest that this is something that the governance committee should entertain, and then next time we have a governance committee meeting, we will add the discussion to that, or you could do it at a later time. But I just wanted to make the suggestion. Thank you, Trustee Horowitz.
Thank you.
Okay, yes, and so just like Roberto was saying, and on this next slide, what the Disability Committee are doing, they're reviewing the medical information that's been provided. They're looking for some clarification, if necessary, from the applicant and the board medical advisor, and then obviously weighing the medical evidence and all the information to formulate a recommendation to the retirement board. So if we go to the next slide, we're on our final step 7. We're now, it's now at the retirement board, and the retirement board are going to make their decision. So ORS will, of course, we place the case onto the board's agenda. If the Disability Hearing Committee is recommending an approval, then it would be placed on the consent calendar. And as Roberto mentioned, if if anybody wanted to pull it from the consent calendar for a full board hearing at a future meeting, that is at the discretion of the board. That can be done. And going on to our next slide, step 7, if in the cases where the Disability Hearing Committee is recommending a denial, the board will conduct a full hearing of the case and will determine if the evidence affirms a disability retirement, if it's a service connected or non-service connected. Then the board makes the decision to either approve or deny a disability retirement application. Basically, at the end of the day, that is a board decision. Then on our next slide, it talks more about in the case where there is a denial. If it is denied, a denial resolution will be prepared and agendized for the board to approve, denying the applicant. Of course, the applicant does have the opportunity and may request a rehearing based on the criteria listed here. So if they feel the board acted without and in excess of its powers, the order, decision, or award was procured by fraud, the evidence did not justify the determination, or the applicant has discovered new evidence which could have been reasonably been discovered or procured at the hearing. And the applicant always has the ability to appeal the board's decision at the California Superior Court. Now that wraps up this, this particular overview of the disability process. Any other questions or comments?
Trustee Horowitz here, going back to the previous slide. Reasons.
Denial process or the step 7?
No, right here, this denial process.
Okay.
The request for a rehearing of the 4 items, the 4 criteria. It strikes me as number 1 and number 3 are overly broad, and that would almost justify a rehearing in any case. Am I
that is correct, Trustee Horowitz. In fact, I have yet, I've been working with both of you boards for about 8 years now, and I have yet to see a case where the members request a rehearing. Usually what I have seen is in cases where they have contested your board decision, I think they have gone to Superior Court. I would think that the most likely situation to request a rehearing is that somehow the applicant discovered new evidence that were not able to provide at the hearing. Because you're right. I would say any of the 1 and 3 basically says, hey, if you didn't like the decision, you can ask again. I get your point, yes. But Stacy, correct me if I'm mistaken, but have you seen applicants asking for rehearing of the actual board hearing?
No, I haven't. I agree.
Yeah, so it's not something that is typical. You are correct. Usually when that happens, they go directly, and again, it's not in all cases, they go to the Superior Court.
I can insert a little bit of process here in that the board legal advisor, Russ Ricada, after the hearing and the decision to deny the case, his office sends a letter to the applicant giving instructions on how to contest it. And they have 30 days from the date that they receive the letter to file the action with the Superior Court.
Okay, thank you. So my concern that a rehearing might occur at a regular basis on rather thin criteria is not something we're actually realizing in practice.
That's correct.
And just to finalize, the denial process is dealing with service-related and non-service-related retirement or disability retirement requests.
That's correct. Yeah, just when you file for disability, you have 2 options: service connection or non-service connection. And yes, a denial could be for either one. Yes.
So just as it comes and deals with the Federated Employees Retirement System, how many does your office go through on a monthly basis or quarterly basis?
So that's a good question for Stacy, but I believe that one of the documents that we provided was some statistics on what are the number of disabilities that are on the pipeline and everything else. So I think that was one of the documents that we provided to you, board, for this particular item. But I mean, that aside, Trustee Jennings, I'll let Ms. Fisher comment on it because she works a lot closer to it than I do.
Yes, it was, let's see here, I'm bringing it up. It's called the dashboard in the attachments.
Okay.
And
we made it really small, so it's hard for you to see.
Yeah, I've got mine up at
disability
150%.
reading this.
All right.
Can we blow that up at all?
Yeah.
Yeah, you can, in your view, you can zoom in. I've got mine at 150%.
So admin, up in the area where, do you see, can you go left? I see your mouse. If you go left, up where it says 75%.
It's really hard to read. Can you just tell me what the number is?
There we go. Yes.
Okay.
So Stacy, can you just read the statistics again?
The total. I don't.
Okay. Well, just to give an example of the flow of how these are going. If you look at the totals, it starts with the end of 2013 to the end of 2020. So in that 7-year period, it went from 79 to 72, which is down 7 applications. However, if you look at the first column in orange, during that period of time, we received 10 applications. So what's coming in and what's going out, they kind of relate to each other, and it is a slow process.
So, but let me say something, Trustee Jenny, and this is really something that falls on staff. We need to really consider perhaps coming back to your board and making recommendations, because first of all, this is a long time, right? 7 years. But second, if you can see 1, 2, 3, the third column and the 4, the total outstanding applications and step 2. Out of 76, we only had 36 complete medical and records on file, which is about 50%. That basically means, and I'm not saying that, as of December 31st, 41 cases is not a lot, but that basically suggests that people may file an application, but they don't always follow through, because you would think that after 7 years, they should be able to have all the medical records on file completed. So we need to do a better job of coming before your board with specific steps to say, hey, this is how we're going to accept an application. And if they don't complete something by 6 months, we're just going to basically delete it, and they have to restart the process. Because what happens is it just makes these numbers look worse than they really are. And it really also extends the average timeline of the process a lot longer than they really are. Right now, that aside, we do have 41 cases. Only 1 is ready for the IME, and so that's one that we're going to be dealing with in the next couple of months, that may or may not come before your board this year before June 30th. So we do as a staff, we do have to do a better job of analyzing this and making sure that we bring forward to you a process that makes sense, because I think what this suggests is that members may file an application and they don't follow up, or like I said.
That's
right.
Also,
well, I mean,
I have something to add.
Go ahead, Stacy.
In the column before the last column is the applications that are deferred. Those all are files that they're finished. The board medical advisor did their report. And either at the point of the board medical advisor report, or it also may have gone to the committee, but it was decided that additional evidence was needed. It wasn't looking like it was going to qualify, and additional evidence was needed to bring the case back for another review. So a large portion of the pending applications have already been completed. They've gotten the board doctor's report, and they may have even gone to committee, and then they were deferred afterward.
Okay, so there's a total of 30 on the bottom that are deferred.
Yes.
And so of the outstanding 72, 30 are deferred. So there's really just, if you don't count those, which I know you can't totally go there, but there's like 42. But even those 42 seem to all be coming from the 2013 time segment. Because if you go to 1419, you know, there's 59 new add ones and 62 completed, right? So it's this backlog in 2013. It's like your unfunded liability in a way.
But smaller.
Yeah, I know. In percentage, it's very large.
Yeah.
That's
yeah. No.
53%.
Fair point. So I think Stacy is correct. I mean, in our case, for example, we should, a member or their attorney should not be able to defer a case for 2 years, for example. If they're going to work on it, we should tell them we have to come back in 6 months. Otherwise, the whole case will be, deleted. And then the same with the members. I have worked in other jurisdictions where, we give them a timeline that they have to prepare and complete all the medical evidence and everything else, right? So now we also have a backlog, and we only have one individual doing the work, and we also have, you can imagine, these are the federated numbers. Police and fire have a lot more cases, and we only have one staff working on this. So this go also hand in hand with the work that we have to do, the budget process, and whether we need more hands to be able to help this. But I think going back to your initial question, yeah, we do have that data, and this is a quarterly statistics that we are to be provided to you. We're supposed to be providing this to you on your consent agenda on a quarterly basis.
Yeah. Okay, thank you.
Trustee Horowitz here. So if I'm looking at the numbers correctly, it looks like we averaged about 3 new applications per quarter in the initial period up to June of 2019. Since then, between 0 and 2 per quarter. I am just curious, is this typical for a municipality with the employee size that we have, that we're running probably on the average of two new applications per quarter for disability? Is this higher or lower than our peer group?
That's a good question, Trustee Horowitz. The bottom line is, I don't know that we have an answer to your question. My educated guess, based on my prior experience, I don't know if Jenny have any comments from her experience working with CalPERS, but my educated guess is that it's hard for me to say, because I have worked in prior plans where there were both general members and disability and fire and police, and this number actually is lower than what I'm used to. But that's because we do have more disability applications for safety members, right? So it's hard for me to say for a plan that is just general members, whether this is a number that is in line with other jurisdictions or not. I don't know if, Jenny, do you have any experience on that or not?
Yeah, I'm just not sure. I think it's probably a relatively easy data point to bring back to the board, but I think the reason I'm hesitant to respond is I want to make sure we compare apples to apples. and, consideration for not only the safety issue, which I think you're absolutely right, Roberto, but also just the size of the system. So I think it's a great question and one we want to know. So perhaps the board wants to direct staff and council to come back with a more thoughtful response on that.
Okay, thank you. I'm not sure it's something that's necessarily under the legal purview of the pension board itself, but it seems like someone should be looking at whether or not we have a typical experience of disability.
So, Trustee Horowitz, I'll see what I can find out, but I have to be honest with you. My main concern is not whether we are receiving the same number of applications as other jurisdictions, as much as my main concern is the backlog, right? I think just the number of the backlog, we need to get it under better control and make it lower. Now, I don't know what the number should be, to be honest, based on the number of employees that we have at the city level, which is, I believe, on the general side, I like to think it's about 5,000, but oddly enough, our chair may have a better idea if I'm right on that or not for general members. But I'll talk to some of my colleagues and see if they have that data and that I can share with you board at a future point. Again, my main issue here and concern is actually addressing the backlog of the disability cases.
Yeah, and I think if we dig into that backlog, maybe there are ones that can go away, or address it legally, I guess, to make sure that you can, legitimately get rid of it, or if not, that we understand what needs to happen so that we can, or what changes might need to happen to do that. It's just, but again, the benefits, what are the benefits to the people? They've been sitting there for we're in 21, 8 years. So could they retire earlier? I guess they haven't had it happen yet, right? So either they retired on their own, or they kept on working, or they, who knows what, right? Or the other piece is the tax deferred. And if it's tax deferred and they eventually get it through, then you got a lot of paperwork to do.
Barbara, what primarily do we fall back on the Disability Council for? Is Disability Council part of the evaluation recommendation process in every case, or is the council primarily just a resource for us? I saw the council noted on the PowerPoint, but I didn't really see where it was part of the process. So I'm just curious. Barbara or Stacy?
Sorry, Jay, I didn't hear that. Could you repeat?
Yes, I saw in the PowerPoint the Disability Council as part of the Disability Committee process. What primarily do we fall back on Disability Council for? Is it a resource? Is the council a resource, or is the council part of every case's evaluation and recommendation process?
It is part of every case evaluation on the disability side, yeah. So they will comment and they will provide support for the medical analysis and provide information and legal implications to the committee for the application, yes. So it is we use them, they are intimately, actively involved in the process.
But more as a resource, because the IME, for example, IME is going to be in every case will have to go through the IME. Every case will have to go through the board's medical advisor.
In every case.
Okay, so what does council do in every case?
That's a good question from council, but I think there are disability terminology and requirements. And so, for example, let me give you a case. So the medical analysis from the doctor will be such that they find the preponderance of the evidence is enough to support the evidence that there's disability and the evidence that there's service connection, then council will follow up with their own legal analysis on this medical analysis provided by the doctor, or alternatively, they will remind the committee or your board that yes, it is important. Your decision making is based on the total information of the package, not just information from your medical advisor, but also the IME and the physicians from the applicant. So you have to take all the data in consideration. So that's the kind of thing that the attorney, is going to be providing the committee and the board on every case.
But the attorney doesn't generate a written product like the IME does, like the advisor does, like return to work.
They do for your board meetings. They do summarize the findings at the committee level. They do provide a memo, right, Stacy? Yes.
Yes.
Okay, thank you. Barbara, is there anything else that you wanted to highlight from the other attachments on 5F?
No, as we said, I mean, one of them was just the summary of the 7 steps, and then there was the Muni code excerpts and the dashboards and the fact sheets.
Oh, also the attachment that's the list of qualifying criteria. That's kind of the bottom line for making decisions on the cases. These are the this was created from an actual checklist that is submitted to the board for the police and fire disabilities. So it's taken directly from that language, and it has been reviewed by the board legal advisor, Russ Ricada, and by the board medical advisor, Dr. Tierman, and they both approved this. But this is, these are the criteria by which a case is finally judged.
Okay. And Mr. Pena, when you introduced this agenda item, I believe you mentioned that in a prior conversation, we talked about doing this training on a just-in-time basis. And does that mean we can anticipate a disability case coming forward in the near future?
No, that's not the case. I think what we explain is this particular one is a very basic, even though it didn't feel like that, a basic introduction to the disability process. We do have possibly, we can come back before you board with our doctor and the attorney to provide more meat to the discussion, more specifically related to the reports. Now, ideally, that would take place, as you indicated, as you and I had discussed in the past, as a just in time, right? Either the month before you have to deal with the disability hearing. We do have a case that is coming up for the disability committee that may or may not resolve in the disability hearing by June. The only reason I mentioned in June, Chair Castellani, is because, as you know, our medical advisor contract runs out in June. So even if we don't have a case, I think it may be a good idea to have, for your board to have this training so we don't lose that medical advisor knowledge before she leaves.
And I'm just curious, when you're talking about how hard it is to get someone, I mean, I assume it's like a retired doctor that's kind of interested in this maybe, and I don't know. I mean, just my 2 thoughts on that is, with the doctors just being probably exhausted with COVID-19 and the stresses it does. I bet you there are a number of doctors looking to retire or to get, I mean, they're just done. And
yeah, so
be interested in something like this, which is kind of more paperwork, a little more simple. People aren't dying on you, I mean, anyhow, just my 2 things.
Yeah, point well taken. I just think that, I'm not sure how we define simple. I think one of the challenges that we had in the past is that it's a lot of work. And if you want to really retire, probably it's not what you really want to do. The other thing is a lot of doctors have experience on working with workers' comp cases. and the worker comps regulations and requirements are not at all very similar to the disability requirements on a pension basis. We were just quite lucky that we found Dr. Tillman that had a background working with the city, which had that experience. But in the event that we find a doctor that is willing to provide this kind of service and is not doing work with other jurisdictions like for workers' comp, it would take a long time for them to and work with us to get the experience needed to really understand what the requirements are to find someone to be disabled and the work restrictions on this disability requirement as opposed to workers' comp. That's not really an easy thing to develop. And if you find a doctor that has been working for 40 years and they're in their 70s, not sure that they're going to be willing to spend the time to really learn our disability requirements to provide the kind of analysis that your board will need. That's the challenge.
And it's not an employee, so they're not getting benefits,
That's right.
It's a contract job.
That's exactly right. Mm-hmm.
But, I mean, again, depending, and you got to train someone either way. And there are probably younger doctors out there who have had their fill.
Yeah, but younger doctors will probably have their own work, and so they don't have the time to do this. That's why I keep saying that we may end up just relying on the IMEs from ExamWorks and MedLink. That may be a real possibility.
Is that a cost benefit savings to the plan? I mean, if we do that?
Well, it's a good question. It does reduces the cost in that we won't have the cost of actually paying the IME and the medical advisor. So it does reduces the medical advisor cost. It would just be part of the ExamWorks contract. So from that standpoint, it's a reduction in cost.
Well, yeah, but then the IME, if they're providing additional services, may, you might see a cost associated with the additional service.
Oh, this is just, it's the same service. The board will have to rely on the IME report.
Mm.
That's it, which they are doing now.
And again, the IME is, just define that for me again, IME.
It's an independent, that's the key word, independent medical examiner.
That's the ExamWorks service.
Yes, that's right. So it's independent from the applicant and the office. So that's why.
You anticipate using a service to recruit for the RFP? I mean, it's one thing to put the RFP out on the street. It's another one to actively recruit to get people to submit proposals.
We don't no, not through ExamWorks because that's what they do, right? So the IMEs, but we are going to be contacting our colleagues, and we did ask Dr. Tillman to reach out to her colleagues to see if they'd be willing to.
Yeah, because I would think someone is doing similar work for Samsara or Alameda County, other local.
Yeah, so the last person that we found, Jay, now that you were with Samsara, right? Not with Samsara, but you were with the county.
Correct.
He did provide services to them, and he quit on us within a month. Yes.
Why did he quit? Just curious.
I don't know the answer to that, Julie. To be honest, I will have to look.
No, it's okay. I was just curious.
Okay. All right.
Got it. All right. So, but
go ahead.
All I'm saying is there might be a cost savings if we just use the IME. I was just hearing what Roberto was saying about Fresno and some of the other areas that don't have that.
Also, it could reduce time in processing.
Yeah, I mean that might, and it'll save you in going out for an RFP. Like I said, it was just.
Well, I mean, we are. Yes. Okay. I think that's it from our side, Mr. Chair Castellano.
Okay. All right. So thank you very much, Barbara, Stacy, for the training. So this is a presentation item, no action decisions, except that perhaps Vice Chair Horowitz may choose to raise this through the governance committee in his role as chair of the governance committee.
Well, I appreciate that, Trustee Chair Castellano, and I really appreciated the question by Trustee Horowitz. But the only way that I believe, if I understand this correctly, that the committee can take that, it will be from direction from your board. So whether it's today or at a future meeting, if this is something you want to consider about studying about the possibility of creating your own committee, it will be something that your board will have to direct the governance committee, so the governance committee can take it on.
Okay.
This is Trustee Sun. Can I cut in something, say something before we move on?
Of course, yes.
Okay, a couple of things. I really appreciate the Barbara's presentation on the city's process on disability retirement determination. However, I think we need more training on the qualification criteria on the disability cases. And all the discussion we had, all the confusion we had in the previous cases, who is qualified, in which case is qualified. I mean, the criteria list is helpful, but the real scenario could be more complicated. It's harder for the committee members to determine. I think we, as a committee or as a board, we should think about more in-depth training on the qualification criteria. That's the key part. Will help us in the disability case determination in the future. I also have another question, bit of obscure in an obscure area, but I just want to get some clarification. So the city's retirement process have a reciprocity agreement with our sister agency and also CalPERS. So let's just say if a city employee or ex-city employee receive the disability determination in another agency, does the city have any role in that in additional determination, or the city is just going to accept the determination from the sister agency and provide the disability benefit?
Casey, do you want to comment on that?
Yes. Trustee Sun, you're correct in your understanding of it. We go by the reciprocal agency's decision. It does not go through the entire process. And we can set them up on a non-service connected disability retirement without it going through the process.
Great, thank you. So in another word, if another agency has made a determination on the disability retirement qualification, the city of San Jose, being the previous employer, no longer have any say in this case, right?
Yes, that's true. If they've already approved it, then that person, because they have to retire from both places at the same time, they're going to come to us to synchronize their retirements, and we will, the retirement was, or the disability was approved by the reciprocal agency, so we're just going to follow suit and retire them out.
Okay, got it. Thank you.
And it works the same way backwards, Trustee Sun. If they find to be disabled from us, it's the same going to another system. But I also wanted to comment on your in-depth training. I agree with you completely, and that's why I indicated this is just the first phase. We do have a second phase where we expect it to be more in-depth, and that's why we want to have our medical advisor and counsel to comment before your board, because that's the intention is to be more in-depth. And I just took note of your comment of more in-depth training in qualification criteria. Is that correct?
That's correct. I think
Okay.
that's, at least for me, that's the part I'm mostly confused about.
No, I understood. So that's the intention, that we wanted to provide this basic and then have the counsel and the medical advisor. Thank you. We will do that. Thank you.
Okay, thank you.
Jay, you're on mute.
Thank you, Barbara. Anything else on this item before we move forward? All right, next on the agenda.
I want to thank your staff for putting this together, for going through it, for being so diligent with all the questions. So thank you very much.
Yes, thank you. All right, item 5G is discussion and action on authorizing the CEO to negotiate and execute a First Amendment to the agreement with ExamWorks. the independent medical examiner for applicant examinations to extend the term of the agreement through December 31, 2025 for additional funds for applicant examination, in the amount of $100,000. This will increase the existing amount, not to exceed amount to $200,000. Mr. Pena, do you want to introduce this item?
I'll turn it over to Barbara.
Okay, thank you.
Yeah, so this is ExamWorks, and as you've heard from our previous training, they do provide the independent medical examinations for the disabilities. I do want to apologize for the incorrect memo date shown on the year should be 2021 and not 2020. And the chair just said the request is to extend the term of the agreement with ExamWorks to December 31st, 2025, and to add those additional funds of 100,000. If you've any questions, please just let me know.
Barbara, when was this initially signed? I guess I'm trying to.
Signed in February 2016, and it was
okay.
5 years. So it's about to expire in February 2021.
Okay, and there aren't any procurement issues, you know, having a contract for 10 years?
Well, the other kind of initiative that we have, and it kind of bleeds into your previous discussion on, you know, maybe changing or adding to the role of the independent medical examiner, is to do an RFP to see if we can attract additional independent medical experts or examiners. ExamWorks is the one of the big ones in California.
Yeah.
And the last time that we went out to RFP, we did not receive very many responses. In fact, I think Stacey, can you remind me, did you tell me we only received 3 and 1 was disqualified? So.
And I'm sorry, I'm not suggesting that we do that. I'm just double checking that we're not going to have the board approve this and have city procurement rules clawed back.
I see.
I did check with a manager at Intercare, our current workers' comp third-party provider, and they indicated that they had tried to find other independent medical evaluation vendors, and they had ruled out that there were any others, that ExamWorks and MedLink are it for California, or for Northern California.
Yeah, again, my question is more about compliance with city procurement policy, not whether or not there's anybody else out there.
Fair enough, Chair Castellan. I don't think there's an issue, but you know, obviously, we had the same situation with police and fire. We didn't have any roadblocks, but if something comes up, we'll certainly come out to your board. But at this point, I don't believe that will be the case.
All right.
Thank you.
Yes, you're welcome. So in that case, could I have a motion and a second for item 5G, authorizing CEO to negotiate and execute an amendment to the ExamWorks contract?
I motion to accept.
Trustee Jennings, thank you very much for the motion.
I'll second the motion.
Trustee Kelleher, thank you very much for that second. Any other discussion from the board or from the public? All right, let's do the roll call, please. Vice Chair Horowitz.
Aye.
Thank you. Trustee Tranja has had to leave. So we're going to go on. Trustee Jennings.
Aye.
Thank you. Trustee Kelleher.
Aye.
Thank you. Trustee Sun.
Aye.
Thank you. I also vote aye, so that motion carries unanimously 5-0. Next is item 5H, discussion and action on committee assignments for calendar year 2021. The attachment in the agenda has the committee assignments for 2020. And, you know, this is an annual annual action for the board. When I saw this needed to be on the January agenda, frankly, I was initially, my first reaction was that we should perhaps keep the current assignments for another year. Since I don't know about everyone else, I'm open to your opinions certainly, but it seems like this year flew by and wasn't, the 1 year was fast in terms of building some experience and expertise in the areas. So yeah, that's my first reaction, but I'll certainly open that up to the board for discussion and then motion in a second. Any thoughts about that?
I agree with you.
Okay. Thank you, Trustee Jennings.
Trustee Horowitz.
Yes.
Have no objections to the current roster, but I would like to register my continuing interest in at some point serving on the investment committee. So
Okay.
I would certainly ask the chair to consider, assuming he is chair once again, to consider methodologies, protocols on how we might rotate through these different positions.
Very good. Yeah, fair enough. Thank you, Trustee Horowitz. I do know, I do remember that from last year. And I certainly don't have an objection to it again for the broader, just falling back on my broader statement about giving everybody 1 more year under the belt for the current assignments, but I've not forgotten that. Peña?
No, quickly, I just wanted to make 2 points. Obviously, I do agree that the current assignments have worked well. Although in the long run, eventually, migrating some trustees around so they get exposure to the areas may be helpful. But I do want to make 2 comments. Number one, Trustee Horowitz is the chair for governance, and I expect governance committee, especially Trustee Horowitz, if the committee take on the assignment of possibly considering the disability committee, you're going to be busier this year. And I also wanted to reach out to Trustee Kelleher, the chair of the audit committee. He knows I sent him an email yesterday along with his counterpart for the audit committee of police and fire, introducing our new senior auditor. And I just wanted to let Trustee Kelleher, Jennings, and Son that the audit committee will be extremely busy this year. There is a lot of work and a huge plan from our new senior auditor. So I just wanted kind of to give you the heads up that we're going to be quite busy. At this point, the committee meetings are scheduled on a quarterly basis. I will check. I think we're going to have one next month. And from that point forward, every 3 months. But there may be a possibility at some point where we may have one after 2 months. So just wanted to let you know that there is a very aggressive goal and plan, and so that committee is going to be quite busy. So just wanted to let you know. Thank you, Mr. Chair.
Roberto,
Yes.
I'm just like on the audit committee. It's really hard to be 100% focused when it comes off of a long meeting like this, and then to go into that. Any way that we can have it at a different time? I mean, so it's not just right after this?
So we can, and I can't speak, this concept was initiated before I joined the board many years ago. I believe because those committees, right, the only committee that meets outside the board meetings is investment. Or the other audit committee and governance, because they meet jointly with your counterpart from the from the audit plan. We try to accommodate where one committee meets after the police and fire meeting and another committee meets after the federated meeting. I think the rationale behind it is to limit the dates that trustees have to find to become available for meetings. But I completely understand what you're saying. If you have a meeting that goes from 8:30 to 2 o'clock, by the time you sit for the next meeting, you're exhausted. The counterpart to that would be that if you don't do that, then all those committee members from both plans will have to find another day aside from your regular meeting day to be available for that meeting. Now, it may turn out to be that the audit committee goal is so aggressive this year that they will have to have their own joint committee meeting dates separate from the boards because it's too much to cover after the board meeting. But your point is well taken, and I think this is something that especially that committee will have to consider after your first couple of meetings and decide how you want to move forward. But again, I believe the concept was to limit the days of availability by trustees. That's why they tried to do it after regular board meetings.
Very good. So if there's no other discussion on it for 5H, we need a motion and a second to use the same committee assignments in 2021 as we've had in 2020.
Trustee Horowitz, so moved.
Vice Chair Horowitz, thank you very much for that motion.
Trustee Sung, second.
Trustee Sun, thank you very much for the second. Appreciate that. Any other discussion from the board, from the public? Okay, let's do the roll call vote. Vice Chair Horowitz.
Aye.
Thank you. Trustee Jennings.
Aye.
Thank you. Trustee Kelleher.
Aye.
Thank you. Trustee Sun.
Aye.
Thank you. I vote aye on that also, so that motion carries unanimously 5-0. Okay, we're going to go on next to item 6, committee reports and recommendations. 6.1 is the investment committee. Their last meeting was on December 22nd. Next meeting is January 26th. And in lieu of Trustee Chandra, Mr. Palani, did you have an oral update for the IST?
Sure, Mr. Chairman. So at the last IC meeting, we discussed foreign exchange costs and transactions costs that were incurred by the plans. And this is an annual report that we provide to the IC. And that was received by the IC. In addition to that, we have a presentation on tail risk hedging by Professor Myron Scholes. This was more of an education session for, this was done at the joint IC for both ICs, Police and Fire and Federated. Those were the highlights. And I don't know if Trustee Sun wants to add anything to that.
No, I think you said it very well. And yes, we reviewed, we extended the two contracts, and then had in the joint investment committee, we had an interesting education on the tail risk. I'm sure everybody is taking that into consideration, and then maybe sometime down the road, Mr. Plani will make a proposal in that strategy.
Thank you, Trustee Sun.
Okay, very good. Thank you very much. 6.1B are minutes from October 27th. That's receive and file. 6.2, the governance committee, their last meeting was on December 17th, right after our last board meeting, and the next meeting is on March 4. Vice Chair Horowitz, do you have an update, an oral update on the committee before we jump into the action items a little bit later?
Well, the update, I think the bulk of the update will be under 6.2D. The B and C are the acceptance of minutes. So perhaps we should move ahead to those items.
Okay, fine. Yeah, so we will, it's receive and file for 6.2B and 6.2C. 6.2D, discussion and action on the committee's recommendation to approve the revised policy on election of board officers. Vice Chair Horowitz, do you want to introduce this?
Right. So this is simply a change where we are, I believe, pulling in the election of board officers by a month. We will, by this proposal, nominate in November and then have the election in December so that the new regime is installed in January. And this will allow for, with nominations in November, if there are multiple nominations, competing candidates for the positions, there will be a month of lag before we would have the election in December to consider the various options.
Yes, great. Thank you very much for that, for the revisions. Any questions for Vice Chair Horowitz? So we need a motion and a second to approve the revised policy on election of board officers.
Trustee Kelleher, so motion.
Thank you very much, Trustee Keller.
I second.
Trustees. Okay.
Trustee Jennings, let's take
Sorry.
your second. You're quicker on the button. So any other discussion from the board, from the public? Okay, let's do a roll call vote. Vice Chair Horowitz.
Aye.
Thank you. Trustee Jennings.
Aye.
Thank you. Trustee Kelleher.
Aye.
Thank you. And Trustee Sun.
All right.
Thank you very much. I also vote aye. That motion carries unanimously 5-0. 6.2E is discussion and action on the committee's recommendation to approve the 2020 board self-evaluation report. Vice Chair Horowitz.
Right. Actually, I think it would be helpful if we look at the second attachment first, 6.2E2. And this was the board self-evaluation report that we completed over the summer. I believe the board members have seen this summary of findings, but I'm not certain about that. So there were a number of areas that the board individually identified as areas of interest, concern, etc. And if we scroll down, we can probably take them in turn. One is concern about succession planning and whether or not the board has an established plan for replacing the CEO and the CIO should that become necessary. There was also some issues with asset allocation and the processes we use to arrive at asset allocation. Members were concerned about both the frequency, efficiency, and I believe the length of meetings. And I think we just heard some comments about the issues of having committee meetings after the initial board meetings, which can run to a very long day. Some people have raised issues about, I guess, essentially the need for civility in our board communications and interactions. And then I believe finally, there was some concern about board education, specifically about the need for education on the disability process. I believe we have all struggled a bit when we had to hear cases and understanding all the criteria and rules of evidence, et cetera, that we have to abide by. But also various board members have also raised the area of education in general. Are there requirements about investments and other aspects that we consider? And then finally, touching on the area of committee assignments and how they're assigned. And that was an area of some discussion during the past year. And that led us to, at the last meeting, to develop some specific proposals that came out of these survey that was done over the summer. So if we can flip to the other attachment, well, let me first pause and ask if there are any questions or comments on the self-evaluation report itself.
Not for me.
So then moving forward to the specific recommendations, we have 3 recommendations. The first being that the governance committee should develop some proposal for a succession planning policy. And now it's a little bit unclear to me whether or not this is stepping on something that the Joint Personnel Committee is also undertaking. And if so, then we certainly should not do that. But we can also utilize our governance consultant Cortex to provide some context and some information about other peer plans, whether or not they have policies, what they might look like, what the considerations are that would inform any initial discussion on a succession planning policy. The second item is a relatively simple one, and that is while staff does provide the chair with a formal script for conducting the meetings that we are participating in currently, they could also prepare scripts for the committee chairs so that the various committee meetings will run more smoothly and correctly. And then thirdly, a recommendation to review the board education policy to see if there are areas of specific requirements, either with respect to investments, asset allocation, and certainly with respect to disability that we should undertake and that all trustees would be required to complete. And I think with respect to the disability, we've already begun that process. So these are the three specific proposals, recommendations that came out of the summertime survey of the board trustees.
So Vice Chair Horowitz, thank you very much for reporting that out. Regarding recommendation number one, no, the JPC is not doing anything with regard to succession planning policy. So yeah, that wouldn't be a conflict with anything that's going on. Yeah, and then as you're reading through that, it makes me think about what Mr. Pena said earlier, that with regard to the committee assignments, yeah, looks like governance committee will be busy as well as the audit committee. JPC is already busy with the other evaluation, the policies for evaluating CEO, CIO. So yeah, there's a lot of work going on right now. But with regard to these committee findings here, are there any questions for Vice Chair Horowitz? Okay, and these look like a very good and appropriate set of recommendations. So we'll need a motion and a second to approve the board self-evaluation and the report, including the recommendations from the committee, from the governance
Motion
committee.
to approve.
Okay, thank you, Trustee Jennings.
I second.
Trustee Sun, thank you very much for the second. Any additional discussion from the board? Any public discussion? Okay, do the roll call vote. Vice Chair Horowitz.
Vote to approve.
Yes, thank you. Trustee Jennings.
Aye.
Thank you. Trustee Kelleher.
Aye.
Thank you. Trustee Sun.
Aye.
Thank you. And I vote aye also. That motion carries unanimously. Thank you again, Trustee Horowitz, for all the work on that and presenting that for us today. 6.3 is Audit Committee. Their last meeting was October, and the next meeting is not till February 18th. Trustee Kelleher, do you have any more updates?
Sure. We're just very much looking forward to working with our new senior auditor, Uman Bassini, and we're ready to get to work.
Okay, very good. Thank you very much. 6.4 is the Joint Personnel Committee. The last meeting was back in November 10, and there's no oral update for that committee. And let's see, item 7, education and training. We have the Cortex report and the Calipers Mutual Assembly from March 8 and 9. Are there any future agenda items? Any further public or retiree comments?
I'm sorry, Trustee Castellano.
Yes.
Well, with respect to future agenda items,
Yes.
perhaps we should have a discussion whether or not the governance committee should consider the establishment of a disability review committee.
Very
So
good.
my understanding that would need to be agendized as a full board issue. And then if if approved, then assigned to the governance committee.
Okay, very good.
So there's not advocating yay or nay on that.
Yes. Yes, so we can, we will discuss putting that on the agenda at the next agenda review meeting. Any other future agenda items? All right, any other public or retiree comments? All right, well, with that, we are adjourned. Thank you very much, everybody, for your time this morning. Have a great rest of your week, rest of your month. Good to see you all.
Thank you, everyone.
Thank you.
Thanks.